All right, guys. Today we got Microsoft, we got Google. Uh, Microsoft rip it up today. We got Google today as well. All right, guys. All right, guys. So yeah, we got the market rip it up. Green Day today and mostly everything. What's up, DS? I know we're a little bit early. We're gonna do a poll here as well. That was up on. Are you bullish or bearish on today's Microsoft earnings reporting call? Bull, bear. Vote on the poll. Let me know what you guys think. Do a Twitter poll like we always do, which is now looks like X. All right, team. We got Microsoft, we got Chat GPT stuff coming out. Microsoft is big because we got AI related stuff. You know, Microsoft owns Chat GPT. Hey, thank you, Kay. What's up, bro? Thank you, man. Um, all right, we're gonna get some music playing in a second as well. I'm putting the Twitter poll up also if anybody wants to vote on that. Uh yeah, we're gonna put this report up. Again, do me a favor while you're here, when you're just joining the stream, hit the like button. We appreciate it. Um, all right, so we got Nvidia. We got Google earnings today as well. So we got AI. There we go. That should be good. All right, beat or miss, guys. Beat or miss. Vote on the poll. Beat or miss as expected. We got our Twitter poll right here. Again, we're gonna see how many people really support me. Hit that like button. We appreciate it. Also, give me a follow on this poll that we got going on right here on Twitter. I'm gonna put this up right here. Again, I'm gonna post this here. Give it a like, give it a follow. We appreciate it. There's the post right there if you want to check it out. We definitely appreciate support. All right. All right, let me make sure you can hear the music. All right, Microsoft. All right, there we go. We're live. Yeah, let me make sure we're monetized. There we go. We're monetized. All right, vote on this poll. We appreciate it. Microsoft, we're going to put this up on screen as well. They are expecting Google too. We got Microsoft. They're expecting 254 EPS on 55.4 billion. That's a big revenue expectation. Their EPS, they've had EPSs that were above 254, but what they're expecting for revenue is their highest quarterly revenue ever at 55.4 billion. We'll see if they hit that or not. Yeah, so they're expecting to. And Microsoft is expecting 254 EPS on 55.4 billion in revenue. And so the full report and call will be streamed live here as well, starting at 4 p.m. Eastern Standard Time. There you go. All right, so the market's been bouncing up a little bit. So I hate to say this, but we did hit our $1,000 daily max loss on the account that was like $300 away from getting funded. And so it doesn't look like today's the day we're going to get funded. We have 2 more accounts that are very close on the second half. And so we got a couple swings we can make tomorrow, and we should get pretty close to hitting it. I think we're at least going to get funded tomorrow, I would say. But it's going to be sometime this week. There you go. So yeah, 254 EPS is what I'm showing on 55.4 billion. It says if y'all show something different, let me know. All right, we also have Google today. So again, a very strong day for stocks, to be honest, after everything. Microsoft popping up to 350. That's a big move here for sure. Yeah, we'll see we'll see what we get and keep fighting that 700 level. What's up, Shepard? What's up, Yair? Market's just been in such a strong trend. Y'all can hear the music, correct? You should be able to. Let's see. All right, so market's been an uptrending basically all day since 8:30. Since the opening bell today, the market's basically been in an uptrend. It's pulling back now. It's been in a state of pullback for the last like few minutes, but it's very close. Snap about to snap. Oh, we do have Snapchat earnings today too. I forgot about Snap, honestly. We just got so much different stuff. Get the Moo chart up. Snap down. Let's take a look at Snap. So here's Google on the left. There's Snap on the right side here. Snap at 1250. So I mean, Snap's still been on a pretty good run the last like. This is Snap since June. So Snap has gone from basically $10 to $12.50 since June. It's a pretty big gain here for Snap. Again, I'm not saying it's going to continue these gains, but it's been on a nice little tear lately. What do you guys think Snap is going to do? Looking at our poll number, most people are bullish on these results. 79% are bullish, 21% are bearish. Let's get our Twitter poll up and check that thing out. All right, so far we got a bunch of votes already. 59% think they're going to beat, 32% think they're going to miss, and 9% think they're going to come in as expected. Disney's up to almost $86 again today too. Snap. Microsoft will beat but drop, in my opinion, for no reason. Yeah, I mean, if we look at a longer-term chart for Microsoft, here is a daily chart. All right, so Microsoft been on a tear since this year. Here's basically when the year started right here. And Microsoft is pumped up from basically 215 all the way up to 350, which is just a very, very big gain there. I'm trying to track some of these accounts. Dude, I lost. There it is. Up to about $1,000 in cushion here. 5. Yeah, so here is my 150K combine. We're up about 1,200 today, but it's just building up a cushion so we can make a push towards like 4. There we go. All right, took locked in another. Now we're up about 1,500 on that. All right, so we just locked that in. Now we're up about 1,700 or so. We got a nice little cushion there in that. We still got 45 minutes left before the market closes here, so we're going to start swinging up until that point. Yeah, I'm in the top step combine. Hey, thank you so much for the donation. I missed the donation earlier, Kay, so thank you so much, man. I appreciate it. I see you. Thank you. Yeah, I mean, guys, let's not be super political. If you're too political, you know, it's just, we're just going to put you in timeout or kick you out. There's just no reason to be super political. My guess is it's also possible the person from earlier created more fake accounts to troll about politics. But, I mean, if that's how he wants to spend his time, it's all good. But kind request. Let's not be super political. It's not worth it. Hey, what's up, Fish? AMD, man. Yeah, AMD is important to watch, too. All right, guys. Again, looking at our poll numbers, about 81%. Mostly bulls here, to be honest. So people are mostly bullish. We're also in another green trade here. We're going to see if we can keep this green trade up. What's up, John? Hey, what's up, dude? Puts on microchips. Yeah, NVIDIA has had a surge up today. Like, here's Microsoft. Here's NVIDIA. NVIDIA's had a freaking day, man. Look at this. NVIDIA up to 460s today. That's a big run. And again, I don't know if it's going to continue this run, but it's a big run nonetheless. Nice little trend on the E-mini, though. E-mini's been in a great trend, easy trend to attack. Yeah. I got some caffeine here. All right, so we're up about 2,000 in this account. I'll show you guys this. So we're up about 2K in this one today. This is a 150K combine. So this is one. Got about a 22-to-1 win-loss ratio in this account today. And we built up the cushion, which is the first move of the system. We'll see if we can keep it up. But yeah, look at that Microsoft's earnings graphs here. We're going to put some stuff up. So here's Microsoft's earnings graph. So Microsoft last quarter showed up for EPS at 245, which is a 10.3% increase year over year. The last 12-month EPS for the months ending March 31st, at last quarter basically, were 924, 3.55% decline year over year. The 2022, so last year's annual EPS was 965, which is almost a 20% increase from 2021. And then 21 was a 40% increase from 2020, and then 2020 was a 14% increase from 2019. So Microsoft has shown some pretty strong growth, and I think this is only going to be pushed even higher with the microchip stuff going on with them here. The microchip's big. There's NVIDIA. I'm going to put Microsoft on the left side here so we can see it. But yeah, Microsoft's been on a little tear. Let's put a 1 minute chart up and then just kind of zoom in. But look at the day Microsoft has had, man. The NASDAQ is up about 1%. The S&P is up about half a percent. The Dow is up about 0.2%. So it's been a pretty good time for the broader markets here. You can see Microsoft's EPS graph is right here. Their quarterly EPS expected at 245 last time in March. At 245. This time they are expecting 254. So 254 is what they're expecting this time for EPS. So they are expecting an increase on this one. The last time they were expecting an EPS over where we are now was in 2021. So we're going to be looking to be right underneath this one somewhere. And then we can also look at the revenue graph for Microsoft, which I believe they're expecting their largest quarterly revenue ever. Is I think what they're expecting. I might be wrong here. So their previous highest quarterly revenue was 52.86 billion in sales or in revenue. So again, 52.86 billion was their last highest one, and this one they are expecting 55.44. So much higher than their previous largest EPS view. And so again, you can kind of see they're expecting 55.4 billion. So we're going to show this. I messed it up. Hold on. I got to give myself a couple more seconds. Dude, the pop-ups are the only problem with this site, but I guess it's a useful site, so it doesn't matter. Let's give it a little bit more of a delay. Okay. This will work. Yeah, we're going to go and put that on Twitter. If you guys want to follow me on Twitter, we're posting all this data so you can kind of keep track of it. But yeah, their previous largest one was 52.8. And we're going to go ahead and post that. And Chat GPT, I'm telling you, is probably helping their bottom line here. But you can follow me on Twitter if you want that graph. All right, so yeah, largest revenue quarter ever. The last highest quarter for revenue was their last highest quarter for revenue was 52.857 billion. And they are expecting 55 point. So yeah, they're expecting 55.44 billion. That's right. It's a 55.44. Yeah, that's their largest ever. I'm trying to make sure my math is right. Well, they hit it. Are you trading the whole 15 contracts? Some of them. It just depends on which I have a couple 50K combines and then a couple. I got a couple 50K ones and then I got a couple other ones too. So I've got a bunch of accounts. We'll probably at least get funded tomorrow, is my guess, but it could be freaking anytime. You know, it could be Friday also. You can see Microsoft dipping down a little bit. Again, so we got our good Yeah, we'll see how much Microsoft moves this today. I watched the rest of that movie, The Covenant. It was a great movie. It takes about 2 days for the account to be ready after major profit target to get funded. Yeah, I mean, I'm not expecting to actually be able to trade Friday, but I'm saying like I'll pass the combine this week. Nice, Jose. Yeah, I love the Q, man. The Q's great. You can watch Nvidia a lot in like other stocks with the Q and find some good stuff to get involved with. All right, so you can see a little dip in Microsoft. You see Nvidia, which is another one we're definitely watching. Google coming out with their earnings today as well, but a lot of them are pulling back so far as we speak. Man, I called DFEN 3x leverage rebound off RTX today, and it was awesome. Hey, nice, man. Congrats. All right, guys. Hey. Disney moving up almost to 86 today, so almost 86. Microsoft must be beat, otherwise huge sell-off. Yeah, what's the justification for that? Again, y'all can make predictions, but what's the reason for them, you know? We got about 100 people. How do you feel about Teladoc on the earnings? I don't like Teladoc as a company itself. I think Teladoc's a risky company because I think their software is replaceable, you know? And I think it's kind of like a new market opening up where there's so many different people that are going to be able to do it that, you know, they're going to have to compete with others in that space. So I think they might have had their TDOC. They had their initial pop, you know, from the pandemic. But since the pandemic ended, they've gone from $3.08 to $23, which shows me competition's there. And it's something you want to be weary of because, you know, all right, so Microsoft's still quiet, sitting right here at 350s. Nvidia at 454 or 458.50s here. Hey, what's up, Relentless? Hey, hope you had a good day too, bro. Hey, what's up, CJ? This dude grinds. Hey, we do. We try, bro. We try. Listen, somebody's got to give you free market data. You know, somebody's got to report on economics. You know, I'm not saying we're the greatest economic data reporter of all time, but we're pretty close to it, you know. That's all I'm saying. Whew. You think Palantir will hit 20 after earnings? Hey, thank you, Alyssa. I appreciate you, man. IV shows 3% on Microsoft. Maybe. Hopefully we get, you know, volatility. I think, again, man, Microsoft is expecting their largest revenue quarter ever. Okay, their largest previous revenue quarter was like 54. I think it was like 52 point something billion. They're expecting 54 billion today. Their largest quarter in terms of revenue ever. And so if we hit that today, even if we just come in as expected, that'll be their largest quarter they've ever done. I'm not saying what kind of move we're going to get from it. I really don't know what kind of move we're going to get from that. What I do know is that that's going to be their largest ever if we hit it. So again, we'll see if they do. You know, let me know what you guys think. Do you guys think we're going to hit it? I'm looking at the poll. What's up, Relentless, man? Yeah, I was talking about you today, bro. I mentioned you in stream today. One of your supporters was like, hey, and I was like, hey, I'm not talking bad about him. Like, maybe I suck at penny stocks. You know, I'm not saying you can't make money at them, but like, I suck at penny stock trading. I got some penny stock strategies. I don't know. Honestly, I haven't even tried to trade penny stocks in years. You know, and I have definitely gotten better at trading in years. I've certainly gotten more disciplined. You know, I've certainly got more discipline. So maybe it's something I'll play with one day, but good to see you, bro. Hope your channel's doing well, man. Yeah, RTX, guys. I told you RTX might bounce back, but I said it might bounce back at 88s. And this thing didn't start bouncing until freaking 81s. And so it bounced, but it bounced a little late. Well, yeah, pennies are certainly not good long time. That's definitely true. But like day trading, I don't know, man. I've got a little better at day trading, so maybe we're in a point in time where I can, do something with my day trading. I don't know. I mean, not day trade. Don't get me wrong, but like when I day trade, I'm day trading like the E mini. Yeah, for sure, 100%. Yeah, RTX, man, just a crazy move for RTX. I would have bought the dip at RTX. I just don't know the company, man. Again, I buy these dips after big emotional reactions on the downside. I buy these dips, but like I only buy the dip if it's a company I know and that I trust is going to do well long term. Like, okay, Apple drops. If Apple drops that big percentage, I'm going to buy that all day, but like RTX, Raytheon, it's a defense stock. I'm not super familiar with defense stocks, to be honest. So it's like, I really don't know if this thing is viable enough long term to buy that type of dip, right? Otherwise, I'd do it. Like I bought the Disney dip and we took profit on the bounce today after a big emotional drop. And we turned what would otherwise be a red trade into a green trade. We bought the dip. Our average price is 85.20. We're at 85, basically 86 right now. So we were able to ride that thing back. But yeah, a lot of these tech stocks are priced high. Yeah, there's a lot of really high PE ratios floating around in tech specifically right now for sure. So the real question in all of this stuff is like, are they going to be able to rebound and move enough to justify some of the PE, to justify some of the price points that they're currently at? Because these things just have crazy big prices right now. Like AMD specifically, Nvidia's pumped up a lot over the last few days. And so it's just been really, not even the last few days, Nvidia's pumped up a lot over the last like quarter or so. So Nvidia's just made some moves. And so again, the real question is, does AI influence these AI stocks on a monetary level enough to justify the increases in price is the real question. And again, I don't know, man. Some of them I think it does. Like Microsoft's PE ratio, even with the gains that it's made over the last year, is still incredibly low relative to other PE ratios in tech, right? Microsoft's PE is like 37 or something like that. It's very little, very small PE, which is great for cost basis. But again, sometimes PE ratio is not the end all be all. And I think when you compare it to something like Nvidia or AMD, it definitely looks good. And Nvidia, I'm sure, is only looking worse and worse relative to their PE ratio with the big increases that we've had. But to a certain extent, PE doesn't even matter with some of these, man. If people like them, they buy them. And that's all that really matters, Yeah, Nvidia, well, AMD is the crazier PE. So like AMD has a PE ratio currently of like I think it's like 500. It's like 600. It's like high 500s. That's a crazy PE ratio. Now, I think Nvidia is at like 200 or something, which is still very high. And to put it into perspective, a good PE ratio is like 30, 20. Conventionally, a good PE ratio is like 15, to be honest. But in this year with AI and microchips and tech booming, I would say a good PE ratio currently is like 30, right? Microsoft's at 37. If they get a big bump up from earnings, then we'll see what their PE ratio looks like. But yeah, that's where we're at now. I don't think AI is really keeping margins and revenue up. The delayed recession is inflation. I think I don't know. I might disagree with you there. And the reason for that is because, again, Microsoft, after their acquisition of the majority stake in OpenAI, which is ChatGPT, now they're expecting their highest revenue quarter ever. And if they hit that, or they even better, they come in higher than that, I think that's gonna definitely stamp some validity onto AI and microchips and tech right now, and specifically Microsoft. Now I think it's a little bit different for like Nvidia because their PE ratio is so high. And Nvidia is not dropping their earnings for like a month, so we still got time for them. But it is what it is. It's something that we gotta watch and pay attention to. Can you please educate us on how you got more discipline with trading? I'm struggling with being disciplined, man. I don't know, man. I think there's a few different ways to look at it, dude. I think I've gotten more disciplined as time has gone on, but I've actually respected the same size of trades less and less over time because to be honest, like, again, I'm not bragging. People get weird, but like, I'm not bragging. But like I've made more and more money as time goes on. And so with that, I'm less worried about it. You know, like for instance, when I first got started trading, I lost like 4,000 day trading in the first like week I day traded ever. You know, $4,000 to me at the time was a lot of money. That was like freaking so much money, you know, for me at the time, like scary amount of money for me to play with. And when I lost that, I was disheartened. I was distraught. I almost cried, you know. Now, if I lost 4K, I mean, I'd be bummed, you know, but like, yeah, I'd probably forget about it by the next day. You know what I mean? At this point in time. So I guess the point is like discipline comes from not being so emotionally attached to the money at stake. And I think that takes time and conditioning through repetition to happen. I think you got to just do it over and over again until it becomes second nature, and it's just easier to not worry about it. You've done it so much already that each individual trade means less and less emotionally for you. And I think that's the way you become more disciplined, is you just kind of get your reps in, you do it over and over again until you stop worrying about it as much. But again, everybody's different, you know, and yeah. What happened with Pac West and Alliance or whatever, Western Alliance? I don't know. They dropped. Did they drop earnings? Let's see. Big regional banks reported stable deposits. I don't see any news for WAL. I'm looking at PACW, which these are regional banks. Pac West, according to the according to a Wall Street Journal report, 2 regional lenders are in advanced talks to combine in a move that aims to further strengthen their business following the banking crisis. Pac West, they said they reported a deal could be announced as soon as today. Both Bank of Cali and Pac West are set to report second quarter earnings. So it looks like maybe an acquisition of some sort. I'm not 100% sure here, but it looks like an acquisition of some sort. Again, I really don't know. Do you recommend removing the P&L from your screen so it doesn't get you emotional during a trade? No, I think you got to crunch the numbers, and you got to do what you got to do in the first place. Like it's hard to explain, but yeah, but I mean, I think you gotta know what your limits are. I don't think you should just ignore your profit or loss. I think the smartest way to do it, to be honest, is to build up a cushion first on the day. Like this is something I'm a huge believer in. You just build up a cushion first. You build up a cushion. You know, say it's all relative to your account size. So like if you got a $5,000 account, build up a $50 cushion on the day, and then you can take, you know, 100 shares or whatever you're comfortable with. And then that way, if you lose, you're down $50, you're break even. You can rinse and repeat it. Try to build up another cushion, start over again. That way, and then if you do build up a cushion, if you build up a cushion and you got like a $5,000 account, say you build up a cushion of 50 to 100 bucks, then you swing a little bit heavy, or you can add size. That way, you don't ever have really big drawdowns in your account. Nothing major, at least, that's going to really set you back. And then aside from that, you're just really strict with regards to like trading on red days, taking larger risks, adding to losing trades, and so forth and so on. Those are the things you got to be strict about. But the reality is, if you have a cushion on the day, you can be more loose, right? You can swing harder, you can take more size, you can add to some losses if you want. That's only if you have a decent cushion on the day. If you do not have a cushion on the day, then you should be trading very small, very slow, very disciplined until you have that cushion. And like that's the right way to do it, where you have the least amount of risk, and it's also going to be the least emotional, if that makes sense, right? All right, so again, we got this one up to where we're up about 2,100 on this one. Do you trade indexes like the TQ? I trade the E-mini, the micro E-mini, the NASDAQ, the SPY, the Q, and other blue chip companies, mostly. All right, guys, we got about 21 minutes. Yeah, I mean, I don't trade the TQ or the SQ. I've got, I've got a big enough accounts to where I can just trade the SPY or the E-mini or whatever in futures. All right, team. All right, so again, Microsoft dipping down to the 200 EMA, trying to hold there. We're watching that now. Again, they're expecting their biggest revenue quarter ever, and we'll see if we actually hit it or not. But looking at our, we did some polling here. 40 votes so far. 57.5% think they're going to beat. 32.5% think they're going to miss. 10% think they're going to come in as expected. Yeah, for sure. Repetition, absolutely. Q, so it gives you 3 times the gains. The Q does. NQ moves fast. Yeah, the NQ moves incredibly quick. Almost too fast. Like today, I bought the pullback in all defense stocks. My funded futures kind of effectively 400x leverage. Yeah. All right, guys. So again, here's Microsoft right there. There's a video on the right. We also got Google earnings today as well. Google earnings are big too, man. There's Google. Google dipping down a little bit today, or a little bit recently, but been having a pretty good green day regardless. Again, this earnings report will be very interesting, to be honest. Y'all do me a favor, hit the like button if you haven't already, guys. Hit the notification bell. I appreciate it. Thank you. If you could take the time to do so, we definitely appreciate it. Snapchat too. Yes, Snapchat. So again, here's the earnings release for all of these here. You can kind of see Microsoft expecting 254 on 55.44 billion in sales. Google expecting 72.7 billion in sales on 132 EPS. Snapchat expecting a 4-cent loss per share on about a little bit over $1 billion in revenue. Visa's coming out with theirs at 8.06 billion for revenue, 211 EPS. We got PacWest, we got Teladoc, we got a bunch of other ones, but these are the big ones today. And again, the big one today really is Microsoft. That's the biggest one, but Google, Microsoft are going to be the big two. And again, the earnings report is at 5:30. 5:30 Eastern Standard Time is when the actual earnings call happens. The actual earnings is at 4 p.m. So that's going to be in like 18 minutes. So again, we got some time here until this stuff drops. But Microsoft is supposed to drop at 4:05 scheduled to, but who knows when they'll actually come out. It'll probably be around 4 p.m. Thinking we'll see a run up leading into the closing bell. Maybe. I hope so, man. I mean, it's possible. The market's up a lot, though, the last few days. And so sometimes what happens is like selling starts at the end of the day because everybody's taking profit from the money they made on the big upside for the big runs. And tech has definitely been running up. You got Google up. Microsoft is up some on the day, although it is pulling back short term, but it still had a pretty big green day. Like, look how big this green day is. It's a big green day for them. All right, guys, we got 15 minutes left. 15 minutes. I'm watching the market. The market's starting to slow down. Hopefully, we get a bounce and a run up at the opening or at the closing bell. What is Top Step's rule for closing trades? So I know you can't trade You can't hold it past 405, I think. And then you can trade again after certain. I'll have to look up the rule. I know they make you stop for like an hour, right? I might be wrong though, and y'all can correct me if I am. All right, so stuff's starting to pull back a little bit towards the indie bell. We got about 170 people here. Yeah, there's a lot of 90 guys. If you want to check out the link to try to get funded, the link is in the description. Check it out. It's called Top Step. It's $49 right now, so it's ridiculously cheap if you want to check it out. FOMC tomorrow may affect things too, for sure. Definitely FOMC is big. Okay, gotcha. All right, guys, Microsoft here. Again, we got a little dip in Microsoft right now. Big green day, though. Little bounce so far. All right, team. 14 minutes until the closing bell. Just 14 baby minutes. We got about 200 people here. That will close your position by 3. BT is 1 hour, 1 minute. You can't trade Top Step per day. Okay, gotcha. All right, guys. Again, what is your expectation? Where's Google at? Google has their barred AI system. You can see it bouncing right at the 200 EMA here. Kind of tempted to get puts now. So my calls, last time I checked, Google was reporting earnings after today's close. That's correct. What time did Microsoft and Google? They both dropped right around 4 p.m. Right around 4 p.m., but we don't know exactly. It'll probably, Microsoft's scheduled, I think, for 4:05. Google is scheduled for right at 4 p.m. on the dot, I believe. And so again, let me put this up. So yeah, Google's expected at 4 p.m. or one of Google's expected at 4 p.m. Microsoft expected at 4:05. Snapchat expected at 4:10. Visa at 4:05. PacWest at 4:20. So we do have bank earnings as well. And remember, guys, bank earnings could influence this heavy too. So y'all be ready for that. These are bank earnings. They're big. They're important. Google expects revenue of $60.23 billion, down 13.6% year over year, and 1.44 EPS, 14.7% growth year over year. Yeah. All right, so again, we'll see if Google's an interesting one as well. I'll actually like Bard a little bit more than ChatGPT. Also, y'all remind me to close out Y'all remind me to switch my headphones if you can. So remind me to switch my headphones if you can. I got to switch them right before 5:30. So I still got an hour and a half or so, but y'all remind me. Yeah, I'm kind of the same way now unless those A+ show up. With the volatility, the drop, I thought it was a good way to pull back. Yeah. So yeah, we got a couple minutes here. And can I trade on Top Step after a certain point in after hours, or is it only you playing options? No, I'm not. I don't like options for earnings. I think options are one of the worst vehicles you could trade earnings with. The reason I think it's one of the worst ones is because like being restricted from selling before tomorrow at 9:30 at the opening bell. Pre-market is when some of the crazier moves happen. Like we cover a lot of this stuff in pre-market. That's when some of the crazy moves of the market ultimately happen. And so being stuck in a contract until market open the next day seems like a really risky play. A lot of the time stocks will make big moves in after hours and then give it all back by market open the next day. So it just seems like a really risky way to trade. We're going to stream the full earnings call, Quentin. We're going to show all the reports. So as soon as the companies drop their reports, we're going to show you the chart that shows up with it, as well as the actual report info, EPS, sales, all that good stuff. Then we are going to stream the full earnings call for Microsoft at 5:30. Everyone and their brother are long right now. That's usually when reversals happen. I don't necessarily know that. I think there's a lot of long positions, but I don't know. I guess I'm lucky in that I use a computer for trading these days and phone for everything else. It means when I decide I'm not trading, my PC goes off and that's it. Yeah, I mean, I'm not a big phone trader. I never really liked trading from my phone. The only way I'll trade from my phone is if I'm swing trading. If I'm swing trading like Microsoft or something, I remember like on TOS, I would just open up the app, or Moomoo's got a great app. You know, Moomoo's got a really good app. Google drops right at 4 p.m., I believe, like exactly at 4 p.m. on the dot. At least the Class A shares are supposed to. All right, so again, Microsoft pull it back up to test the 200 EMA now. What have I done? All right, guys. We got 8 minutes until the closing bell. We got a couple more left until the actual earnings report, which is supposed to be at 4, but we're going to have a whirlwind of earnings that show up. What's up, Amber, Quentin, Rocket, Eric? All right, big spike up in Microsoft. Look at Microsoft run up to 351s right now. Microsoft up to 351s. We got Google at 123s. Look at these big pops here, man. Let me make sure Microsoft didn't leak their numbers early. All right, so Bank of California advanced negotiations to buy PacWest. All right, so pizza scented Xbox controllers are a thing now, thanks to a Teenage Mutant Ninja Turtle limited edition controller. Soft landing is wishful thinking, according to some. Yeah, be ready. If Google and Microsoft post bad earnings and FOMC is negative sentiment, I think we're going to see a really bad day tomorrow. Maybe. You know, we got Meta earnings tomorrow evening as well, and that's going to affect everything with threads, microchips, you know what I mean, the whole thing. Like that'll all be very relevant to everything going on. All right, guys, we got 6 minutes here. 6 minutes. Can I ask if Microsoft positive results will make the NASDAQ go up? Probably. Microsoft is heavily weighted in the NASDAQ. So Microsoft is number 2 in the NASDAQ. So yes, if Microsoft goes up, NASDAQ's probably going up. If Microsoft goes down, NASDAQ's probably going down. You know? So yeah, it's heavily weighted. All right, so we got a little pop-up. Look at Microsoft rip. I don't know what is dragging the market up this much. Maybe people are just front-loading ahead of earnings. But again, Microsoft is flying up ahead of the earnings bell today, man. Look at this. So Microsoft up to 351s at one point. Finally dipping down a little bit now, but... All right, guys, we got 5 minutes until the closing bell. Except for Apple. I don't think it's front running. Yeah, I mean, someone bought huge volume in Microsoft last few minutes. If it's going to be used for an after-hour dump, it's going to be bad. Maybe. Thanks a lot for your answer. Much appreciated. Thanks. Yeah, all good, dude. Microsoft leaked their earnings to some big money that paid for them with real-time. Maybe. We got a big pullback here. So look at this big dip. So this is just some size going in. Dipping all the way back down. I mean, it doesn't matter too much. Look at Google breakdown as well. Again, we got about 4 minutes left. 4 minutes left. All right. Remember, Microsoft earnings today, guys. We got a couple minutes left. All right, guys, 4 minutes. 4 minutes. Apple dump. Again, let me know your last minute calls here. 75% of people on our Twitter poll or on our YouTube poll think we're going to be bullish from this earnings report. 25%. So 3 out of 4 traders think we're bullish on this earnings report on YouTube. On Twitter here, we got 60% of people think we're going to beat. 31% think miss. 9% as expected votes. Also, if you haven't already, give me a follow on Twitter. We cover all this stuff. We drop all of it live quickly. This is Moo. We'll talk about Moo a little bit later, but yeah, there's always a leak comment. Come on, man. Show me the good results so I can go to bed and sleep well. Writing from the Netherlands. Hey, man, I hope we get good results, dude. I hope Microsoft goes up. Microsoft, the PE ratio is not terrible for it. Like, the PE ratio relative to NVIDIA, AMD, and a lot of these other AI stocks is pretty solid for Microsoft. It's not bad, I would say. It's not necessarily great. It's at like 37, so it's high normal, but it's definitely normal. It's relative to AMD, which has a crazy big one. You know, I think it's doing better than them, for instance. Yeah, everybody always claims there's a leak. Usually they're just trying to push their own sentiment. Like if they're really short biased or have a big short position, they're saying, oh, it's a leak and it came in really bad. Or if they have a big long position, oh, there was a leak and it came in good. You know, that's usually the story there. They're always wrong. At this point, they would have accidentally got it right. And so they're still wrong. So don't trust anybody that says there's a leak. There's not. We'll pop and sell off with guidance, maybe. Initial pop, then dump. We got a couple people saying that. Western Alliance drops their earnings as well. That's an important one that you want to watch also. Western Alliance. All right, guys, we got a minute and a half. Minute and a half. I do hope Google wins the long AI battle. I mean, I like Bard. I think Bard's good. For software, Bard's not bad. All right, team. Here's Microsoft on the left side. We're going to make it a little bit larger here so you can see it. There's Google on the right. Abercrombie seems to have a PE of 60. That seems insane. Yeah, but it's Abercrombie. It's obviously overpriced at $40 a share. Nobody freaking shops there, dude. Nobody uses them. It's Abercrombie. They haven't been cool in like 10 years. You know what I mean? So like them at $40, I understand the PE ratio being 60. That's high. A PE ratio of 60 is high. Don't get me wrong. It's very high, right? A good PE ratio is like 15, you know? All right, less than a minute, guys, less than a minute. Make sure you hit the live button next to the play button. Make sure you're fully caught up on the stream. All right, here we go. We got our sources up. We are ready. Again, Google at 122s. Breaking down a little bit. Google's set to drop theirs right at the closing bell. They're going to be the first to drop. 132 expected for Google on 72.77 billion in sales. All right, so here's the closing bell. Make sure you hit the live button next to the play button. Hey, thank you, Rocket. All right, here's the closing bell. And there's the closing bell. Let's watch Google. Google's supposed to report right at the close today. Let's watch Google. It's on the right side here. Here's Google. Watch for big volatile candlesticks. Watch for big volatility here. There's Google. Nothing yet. Waiting. Not really seeing any big volatility. I'm watching Snapchat as well. Snapchat is moving up some, but nothing yet. Watch for big volatility here. Again, there's Microsoft on the left. Google on the right. Google dropping down to 122.80s here. 122.80s. Yeah, I'm not throwing shade at Abercrombie. I'm just not buying my stuff from there anymore. All right, there goes Google with a big pop up to 123.40s. 123.40s for Google. Big pop up. Big green action here. Snapchat has moved some as well, but we don't really have anything dropped yet. Nothing out yet. All right, look. Look at Google. Down to 122.80s, guys. 122.80s. All right, big drop for Google. Big drop for Microsoft. Big drop. Big drop for Microsoft down to 341s. Volatile right now. Volatile now. 340s for Microsoft. Going up and down. I'm looking at Twitter to see if any of these are out yet. I don't see anything. Google. Look at Google ripping up. You guys, the 124 for Google. Rip it up. 125 for Google. Microsoft moving. Looks like it's just with Google here. Microsoft EPS beat, I think, right? Microsoft showed 269 EPS, beat 255 estimates. Revenue of 56.2 billion, expected 55.47 billion expected. So Microsoft showed their highest revenue quarter ever just now. Microsoft showed their highest revenue quarter ever just now. Here's the link right here to the actual Microsoft numbers. Their highest revenue quarter ever right now, and they're gapping down a little bit. Google is still consolidating. We're waiting to see what we can find for Google here. Google just showed up. Google posted EPS of 144 for Google. 144 EPS versus 132 estimates. Google 144 EPS versus 132 estimates. So Microsoft did better than expected. Google did better than expected. Google's ripping up, though. Google's up to 127s right now. 127s for Google. Big increase here. And again, Snapchat is down also. I think Snapchat dropped their numbers. Let's see. Snapchat, Alphabet, 144 versus 134 expected. We're going to put this up on screen as well. And revenue of 74.6 billion versus 72.82 billion expected here. So we're going to put both of these up on screen, Microsoft and Google. Google flying up. Microsoft pretty flat, all things considered here. Microsoft pretty flat, all things considered. All right, so Google again ripping up. Microsoft still consolidating some. Dipping down to the bottom of the range here for Microsoft. Look at it. It's down to 342. Is there a dip buy opportunity here, guys? Let me know. But Microsoft breaking down. Again, we do have Google flying up to 127s right now on their EPS beat. We can look at all their numbers here. Again, we're going to go ahead and read some of this for Google. So Sundar said, quote, there's exciting momentum across our products and company, which drove strong results this quarter. Our continued leadership in AI and our excellence in engineering and innovations are driving the next evolution of search and improving our services. With 15 products that each serve 500 million people and 6 that serve over 2 billion each, we have so many opportunities to deliver on our mission, end quote. Google, rip it up right now. Microsoft, guys, we're going to put all these numbers up in chat. There's a lot of different data points to cover here right now. Again, Microsoft did come in better than expected. Google's the one reporting most. So Google showed net revenue of 18.37 billion, second quarter revenue of 74.6 billion. Second quarter Google advertising revenue at 58.14 billion. Traffic acquisition cost about 12.54 billion. Other bets revenue 285 million. Google Cloud revenue 8.03 billion. YouTube ads revenue 7.67 billion. Google search and other revenue 42.63 billion. Operating income of 21.84 billion and Google services revenue of 66.29 billion. All right, so that's Google. Microsoft, Microsoft did better than expected on everything, but for whatever reason, they're just not loving this earnings report. Snapchat, I don't know if Snapchat is out with theirs yet. Yeah, I mean, again, I don't know why Microsoft's dropping. You never know for sure why anything does anything, but Microsoft not really liking this, and that's okay. They've been up a lot. Their PE ratio is low. Google just broke highs again, got up to 127.60s. Again, 127.60s for Google. Look at this move. 127.60s. Snapchat started to come back. Western Alliance dropped their numbers, I believe, as well here. And again, we are going to throw it in subscribe only mode. Again, we're going to stream the full earnings call live at 5 p.m. or 5:30. So here is the full list. Again, Google breaking highs again up to 128.22s, guys. 128.22s. Snapchat still hadn't dropped their numbers yet, so Snapchat's not out, but I do see Western Alliance moving up. Snapchat's trying here. All right, so again, Google up there to 128.20s, 128.40s. Yeah, I mean, the drop in Microsoft's not super substantial. And so, like, stocks are going to go straight up. If they were, I'll tell you this, if it was as easy as just picking the company that had the good earnings, then that's all that would happen. It's like people would wait for earnings to drop and just buy stocks. That would be really easy to make money. Again, Microsoft quarter four intelligent cloud revenue came in at 24 billion, up 15%. Quarter four, more personal computing revenue was 13.9 billion, down 4%. Windows OEM revenue down 12%. Devices revenue down 20%. All this stuff up in chat. Yeah, Google rip it up. Visa just dropped theirs. They posted a EPS of 216. They expected 212. Revenue of 8.1 billion. Expected 8.06 billion. Again, there's Visa right there. Again, look at Google, man. Google's just flying up. 128.60s now for Google. 128.60s. Here's Microsoft on the left side here. It's starting to rebound some. It's not like the reddest earnings report ever, but it's definitely not reacting super well relative to what they showed. All right, so let's look at the Microsoft. All right, so here's the Microsoft fiscal year 24 net release here. So again, Microsoft announced the following results ending in June 30th quarter for the fourth quarter. Revenue was $56.2 billion, an increase of 8%, 10% in constant currency. Operating income was $24.3 billion, and increased 18%. Net income was $20.1 billion, increased 20%. Diluted EPS was $2.69, and increased 21%. They said organizations are asking not only how, but how fast they can apply this next gen of AI to address the biggest opportunities and challenges they face safely and responsibly, said Satya Nadella, chairman and CEO of Microsoft. They said, quote, "We remain focused on leading the new AI platform shift, helping customers use the Microsoft Cloud to get the most value out of their digital spend and driving operating leverage. We have delivered a solid close to the fiscal year, driven by Microsoft Cloud quarterly revenue of $30.3 billion, up 21% year over year." And that was said by Amy Hood. And you can kind of see the rest of their numbers right here. Office commercial products and cloud revenue increased 12%. Office consumer products increased 3%. LinkedIn revenue increased 5%. Dynamic products and cloud revenue increased 19%. Server products and cloud services revenue increased 17%. Windows OEM revenue decreased 12%. Devices revenue decreased 20%. Windows commercial products and cloud services revenue increased 2%. Xbox content and services revenue increased 5%. Search and news advertising revenue, excluding traffic acquisition, increased 8%. So that is what we're looking at now. You can see the GAAP numbers. Revenue was $211.2 billion, increased 7% for the fiscal year of 23 so far. Operating income $88.5 billion. GAAP, and GAAP stands for generally accepted accounting principles, is what GAAP stands for, if you didn't know. Diluted earnings per share was 9.68. It increased slightly. GAAP results include the quarter two change of $1.2 billion negative impact to operating income explained in the non-GAAP definition. And so, yeah, Google flying up still at 129s right now, guys. 129s. Microsoft mostly just flat, and I think flat's okay. I think they've had such a big move over the last year that staying flat here is all right. Is Snapchat out with their numbers? I've been waiting for them to drop. Here's Snap. Okay, Snap is out. Snap revenue was $1.07 billion, beat the 105 estimates. Here's Snapchat. Put Snapchat up on the right side here. Here's Snap right here on the right. Big drop at 10.5 billion. Or I'm sorry, $10.4 a share here. Do I want to buy this dip for Snapchat? Is the question. Should I buy this dip, man? I don't know. Honestly, I'm thinking about it. Should I buy this dip? Snapchat down to 1050s. Guys, 1050s for Snapchat. Should I buy the dip? I don't know, man. I think there's an argument for it. But Snapchat's a social media company. They've got like 200 million daily active users or more than that, I'm pretty sure. Yeah, kids love Snapchat. I mean, Google's had a pretty big move over the last year for sure. Like here's Google, just to put this into perspective. Here's a daily chart on Google. So Google's had the move since this year. Like here's the year for Google. Google's gone from 85 to 122. So that's a move for Google for sure. Now, it might not be as huge as like NVIDIA or, stuff like it. Microsoft maybe even comparable. But it's still been a pretty good year going from 88 to 130. It's a pretty good year. I have no idea what you should buy. All right, guys. And also, if you haven't already, guys, check out Moomoo. Moomoo's really dope. If you like the platform I'm using now, I'm using Moomoo as a platform. And Moomoo is really cool because I can go to this explore section here. I can build my own screener. Specify with PE ratios, find the good stocks. I can go to hot strategies, see bullish symmetrical triangles, bullish diamonds, bullish wedges, bullish triangles, double top, triple top, head and shoulders. I can go to market hotspots and see the good heat map. I can see what sectors are performing well, copper, aluminum, packaging, farms. I can go to hot stocks and pre-market, after hours, IPOs. I can go to their paperfolio section and see what other traders' portfolio looks like. Follow those traders if I want to mimic their trades or copy those trades. Incredibly useful for traders if you want to learn, guys. Incredibly useful. Their news section is the best in the game. They've got a great economic calendar as well and a bunch of other cool stuff. I can go to markets and look at futures data, ETF data, bonds data, Forex data. If you open up an account, they have zero commission stock trades. You can trade the entire time in pre-market. And if you open up an account and deposit $100, you get 5 free stocks. You open up an account and deposit over 1,000, you get 15 free stocks. You deposit over 5K, you get the previous 15 plus a free share of Google or Tesla, and I did get Tesla as my share, and it has appreciated since then. If you want to check out Moomoo, here is the link. They are a sponsor of mine. Great way to help support the channel. Check it out. There's the link. We appreciate it. We are going to stream the entire earnings call, guys. The entire earnings call is going to be streamed live right here. Don't go anywhere. People talking about Abercrombie today, man. All right, look at Microsoft up to 345s. 345s. Google, man, still a huge day, up to 130s right now, man. Look at this. What a crazy day for Google. Great numbers for Google. Again, Google, here's a crazy stat. In after hours, Google hadn't had one red candle on a 1 minute chart. Now, one red candle for Google in after hours, which is kind of crazy. Snapchat, again, 2-cent loss per share. They expected 4 cents. Revenue of 1.07 billion. They expected 105 billion. Expected. Intel announced this strategic collaboration agreement with Ericsson to utilize Intel's 18A process and manufacturing tech for Ericsson's future next gen. Yeah, Microsoft still sideways here. Is it reasonable to buy a dip here, guys? I guess is my question. Should I buy the dip? Meta is up too. Yeah, Meta drops their earnings tomorrow. That's going to be a big one as well with the FOMC meeting and all that stuff. Meta does drop their earnings. That's going to be big. We're at $300 for Meta. So Meta over 300 right now. But Google, man, that's their first red candle all after hours, which is kind of crazy. Again, Microsoft's still pretty flat here. They haven't really done that much. They've basically gone like this for Microsoft. It's not really a big move. But it's not a red move either, so could be worse. Microsoft calls at 5:30. What do you guys think about the rate hike decision? I'm going to end this poll. We're going to do another poll here. Bullish or bearish? We're going to end this. But does Microsoft break 400 this year? Yes or no? Vote on that poll. Does Microsoft break 400 this year? Meta breaking highs right now as well. Meta up to $301 right now. 301 for Meta. Earnings are okay for Microsoft. They're definitely not bad. They had their biggest quarter ever. I'm pretty sure, right? Let me make sure I'm right with these numbers. I'm pretty sure this was Microsoft's biggest quarter ever. I'm pretty sure. Yeah, so Microsoft hit their largest quarterly revenue ever. Again, Microsoft hit their largest quarterly revenue ever, showing up at 56.2 billion. EPS showed up as 269. They expected 255 expected. All right, so again, we do have a little bit of a trend here. We can look at this Microsoft trend right now, and you can kind of see that's a terrible triangle, but like, let me redraw that. But you can kind of see if you ignore these candle wicks, you kind of see like a little symmetrical, triangle pattern right there. Now we'll see if we break. It doesn't mean we're going to. It doesn't always mean we're going to break, but we're watching it. All right, so Elon Musk put out something that said Twitter was acquired by X Corporation both to ensure freedom of speech and as an accelerant for X, the everything app. This is not simply a company renaming itself, but doing the same thing. The Twitter name made sense when it was just 140 character messages going back and forth like birds tweeting. But now you can post almost anything, including several hours of video. In the months to come, we will add comprehensive communication and the ability to conduct your entire financial world. The Twitter name does not make sense in that context, so we must bid adieu to that bird. Let me know if you think that's a good move or not. I think it's a little early, but maybe. But again, he's proved me wrong before. Snapchat at 1050s right now for Snapchat. 1050s. I can't help but buy a little bit down here, to be honest. I'm just gonna buy a little piece, a little baby piece of Snapchat. I'm sure somebody's gonna complain about it. PacWest shareholders received 65 cents of a share of Bank of California. Yeah, I saw the PacWest Bank of Cali news. Teledoc up. Snap is Abercrombie, bro. I don't know. How many daily active users does Snap have? Snapchat had how many? Average person posts 20 to 50 snaps per day. As of the first quarter of 23, Snapchat had 383 million daily active users worldwide, which was up from 375 million the previous year in 2022. All right, so in 23, first quarter, Snapchat had 100 million daily active users in the North America continent alone. All right, Microsoft's starting to pop up a little bit. It's at 345.90. 345.90. Do you think Microsoft could move up with tomorrow's market open? Maybe. What time is the Microsoft call? 5:30. Yeah, Google's still ripping up. Snapchat dipping down a little bit. We bought a little piece of this down here. Again, I'm not even, it's a very small risk trade, to be honest. So I'm not going to front about it. It's just a little bitty trade. What is Microsoft called? So at 4 p.m., they do the actual earnings report. And then at 5:30 today, there's going to be the call. So in about an hour. Fed Funds Tool says it's 98. Yeah, we're almost certainly going to do a 25 basis point rate hike. So yeah. Google making me rich. Nice, Corey. Just wait till the conference call. Yeah, I hope it goes up for the conference call. Snapchat, hopefully it keeps dumping. Microsoft report was okay. I mean, it wasn't bad. Yeah, I think the only problem with the transition to X, or the name X, is that there's a sentimental / nostalgic value of Twitter that I think he's bidding bye-bye to. And I think with Threads coming out, I think the worst thing you could do is kill some of the nostalgia that comes out with Twitter. Because I think one of the things that's going to retain people to Twitter is that nostalgic aspect of it, right? And so I think if you get rid of that, especially when there's other platforms that are bidding for that market, I think there's risks there. But again, Elon's obviously probably smarter than me. So, I mean, maybe I'm wrong. Again, chat, let me know if you guys think I am. Microsoft started to bounce back here. I should have bought the dip, honestly. I got 20K on Microsoft, down 800 as of today. Sorry to hear that, man. All right, so consolidation for Snapchat here. Again, I'm watching Microsoft. So yeah, I'm watching Microsoft here. Again, we'll see what happens. Yeah, say AI a lot. We'll see what that does for us. Yeah, we'll see. We'll see what he does today, man. This is a big report today. This is an important report to pay attention to. And then remember, we got the Fed rate hike decision tomorrow. Um, does Microsoft break 400 this year? 70% of people say yes, it does. 30% say no, it doesn't. Take a shot every time they say AI, bro. You can be drunk by the end of it. If I'm Microsoft, bro, every time I cough, I'm saying AI in the conference call. If I'm Microsoft, I'm figuring out a way to say that as many times as I can. So look, Microsoft's starting to push up. It's at 340s. There, guys, 340s for Microsoft. Again, we'll see if it actually holds, but it's trying to make a bounce back up here. Let me pull the Discord up. I didn't even pull the Discord up. All right, so we're trying to move back. Snapchat at 1040s here, 1040s. Meta pull it back a little bit now. And again, I got a very small position in Snapchat to where it's not anything that's going to, freak me out. Teladoc going to keep moving on the call. It's down bad the last 3 days, and Microsoft owns them. Can you day trade in Moomoo? I mean, I could if I want to. Here's Snapchat. Dip it down. Microsoft. We might try to buy a little bit of Microsoft on a pullback here if we can. What do you think about NVIDIA? I think NVIDIA's up too much for me, personally. Like, my preference for NVIDIA, I think it's up a little. I think momentum could cause it to push up more. But in terms of, like, where I want to enter an investment, it's not really. It's a little bit too high for me. The PE ratio is too high for NVIDIA for me there. Teladoc. Yeah, Teladoc had a nice gap up. It's up to $25 a share now. Microsoft pull it back a little bit. I mean, I might buy a little bit of this dip. Let me see. And so I can't market order. I'm going to have to limit it and just get it to follow the market price for me. See if it'll fill me. All right, filled. All right, so I just bought a little bit of Microsoft on this little pullback. You can see my price level there. Average price is 347 even. So we'll buy a little bitty dip here, see if that continues to work. Tomorrow could open at 353. What's your rule when it comes to profit taking? I mean, I usually, if I'm up big in anything, I typically take profit. Look at that nice little bounce. So we caught the bounce. Look at our price level here. So we're probably up about $20, $25 on this trade just now. Probably have about $20 on this trade. Let's see if it gives us a little bit more. I'll probably take profit fast if I can. Give it a little bit more time to bounce. Snapchat bouncing back up too. Snapchat's at about 1040. Trend line on Microsoft. Take profit and run. I mean, again, it's such a small trade. I'm not going to be super emotional about it. I'll probably take a little bit off here. hand. $247.50. Let's see if it consolidates and moves up some more. Either way, I can hold it pretty close to flat. Like, if it starts to break down under break even, I can just decide to cut it and not worry too much. All right, we just got out of half there. Locked in profit. A little bit less than half. We got about 40% of the position there. We're going to hold the rest and let the rest bounce if we can, but that'll protect the trade to where if it turns against us, we're still going to be okay. Yeah, tomorrow is the FOMC meeting. Yeah, I mean, that's a way to trade it, Kaz. I appreciate the advice, you know, but like I think everybody has their kind of own way. I like buying pullbacks. All right, nice little move here. All right, we just got out a little bit more, just locked in some more profits. So yeah, we're up like 20 something on Microsoft already in about 5 minutes. Not bad. But again, we bought this little dip. You can see our price line right here. Yeah, you can see we're up $25 on the trade so far. Already locked in most of our profit too. Logitech going up. Yeah, I think Logitech had earnings. Look at Snapchat moving back up too. Hey, we bought Snapchat. We're going to put Google up as well. I can't remember where I got filled on Snapchat. I bought Snapchat on Toss. Okay, good. All right, yeah, we're good there too. Netflix. Yeah, I mean, we already locked profit in Snapchat, so when we have the opportunity to do that, we're going, you know, with Snapchat, we're pretty break even. I mean, with Microsoft, we already locked in profit. Snapchat started to bounce back. And again, I don't mind sitting on this. Again, I've got like, how many shares do I have? I have 50 shares with Snapchat. So like if we break all the way down to 950 down here, I'm down $50. It's not the end of the world. You know, and again, if we start to really crack down, we'll cut it. It's not like we'll be fine. What's Netflix doing? Meta's at basically $2.99 right now. Here's Netflix. Netflix is not really reacting the best to this either. Snap is losing market share to the likes of... Yeah, I mean, it always has been, though, but people still use it. Like, a lot of people still use it as the thing. What's up, CT? All right, the earnings call, guys, is going to be here pretty soon. Do you guys think they'll say positive things during the earnings call? I mean, obviously they're going to try to, but I guess the question is, do you think the market reacts well to this earnings call? I don't know. Question what I want to ask myself in Microsoft is if we start to break down under my average price, do I want to get out break even and then just have like a small green trade, or do I want to risk do I want to let it work a little bit more is the question. I don't know. Chat, what do you guys think? Again, Microsoft hit their largest quarterly revenue ever with 56.2 billion in revenue, EPS of 269, expected 255. It's pretty good for them. Is this live? No, this is not live. This is me. Just I'm psychic and I can predict exactly what you're gonna ask me and then answer at the same time. But it's not live. No, I don't use stop loss. Teledoc? Yeah, I mean, here's TDOC. Get up to 2470s. Looking good. I mean, it's had a rough few years, but it's looking better. Google's still over 130s. Do y'all think it'll hold? And I think I'm actually going to take a little bit off of my Snapchat position. I'm going to take half off. I just don't want to take too much risk here and give back gains I've made on the year. I can hold 25 shares. If it pumps up, I can make a little bit, and that's okay. I got to limit my risk and use some risk management there for Snapchat, I think. Because while I think it's cheap, I think Snapchat is volatile enough to fluctuate between like $8 and $12 a share. And so with that, I'm right in the middle range there. And so I'm going to limit my size so I can be a little bit less biased and a little bit less emotional about the average I have. Yeah, Microsoft's obviously good. Will you close the stream with what? Yeah, Microsoft earnings are out. Yeah, so initial drop, Yair. Snapchat? I don't know. If you're talking about Microsoft, I'm not sure. When I'm not sure, I usually tread towards risk management. Google's still pumping up. Look at Google, man. Google's moving. Again, I'm still letting Microsoft dip. I'll probably hold that through the earnings call, is my guess. You can also limit my size a little bit and get out another little piece. I think I will, actually. You gonna fill me? There we go. All right, so Google's still ripping up at 130.55s for Google. Yeah, Snapchat earnings call is going to be today sometime. I don't know when. I'm in Google, but I'd be crushed. Yeah. You don't use a stop loss. I use a stop loss, but it's not a physical stop loss because number one, physical stops are hard to set in pre-market or after hours and extended hours. So it's just a more difficult thing to get involved with. Number two is a lot of the time market makers can kind of hunt out stop losses. They're like, I use stop losses. Like, I'm not going to say I don't use stop losses. Like, I have risk parameters, of course, but they're mental stops. Like, I don't set actual hard stops. It takes too long, and usually my trades are either long enough to where it doesn't matter. Like, I can get out at a generalized area, or I'm taking such short-term trades, it doesn't make sense for me to set one physically and then cancel it and then set another one. I can just kind of hover my mouse over the sell button. But everybody's different. Everybody's a little bit different. Some people, for peace of mind, they have to set physical stops. It's all subjective. Pac West, I believe, is getting acquired. I think somebody said you're going to get like something like, I think Pac West, you're going to get something like 62 cents for every share or something like that. I can't remember what it is. You're going to get 0.62 shares of the other acquiring bank. I think, I'm not 100% sure though. Yeah, Snap expects daily active users to reach 405 and 406 million in the third quarter. Daily active users are up 14% to 397 million for the second quarter. Third quarter revenue came in better than expected at over a billy versus 946 estimates, 946 million. Google, guys, up to 131s, man. Google's really been the belle of the ball today with the earnings, man. They are doing great. They're looking really nice, pushing up big. Microsoft calls at 5:30. Snap didn't miss. Snap beat EPS and sales. Both EPS came in better than expected by 50%. Or no, by 50%. And sales came in higher than expected as well. So Snap didn't miss. How Snap even hit the $70 a few years ago. I don't know. I think there's an argument for Snapchat long term. Short term, who knows, man. Again, Google with a huge play today. Huge run up. I chose two $110 Google calls instead of three 115 ones. Oh, I don't know. Snap drops. Yeah, I mean, Snap's down a little bit, but again, I'm taking it for a longer term trade. I mean, it already gapped down huge percentages, so I got time to let it bounce if I want. The numbers didn't seem that bad for Snapchat as well. I mean, their revenue dipped 4% to 1.07 billion, but came in higher than the expected number. Their daily active users is almost 400 million, and they said they expect to reach 400 million DAUs by next quarter, which is a pretty good sign. I mean, I think for growth, I think one of the things that hurt Snap was their AI. It just did really bad. Everybody said it was bad. All right, there goes Google ripping up again over the 200 EMA, which is a great sign. Do you think a big miss by NVIDIA next month will have a major impact on the market? Macro, yes. I think if NVIDIA misses big their next earnings report, I think it's in late August, that's going to drag the market down. NVIDIA is a heavily weighted stock, and not just that, but like microchips overall are pegged to NVIDIA right now. And so weakness in NVIDIA is going to mean weakness in microchips. And NVIDIA has been one of the sole reasons the market has been surging up so much over the last quarter. And so if NVIDIA comes in really bad for earnings and have some type of big correction there, it's going to drag the rest of the market for sure. How much, we don't know, but it's certainly going to influence it. All right, so we're filled. NVIDIA August 23rd. Yeah, so NVIDIA drops their numbers. Let's take a look. NVIDIA drops theirs August 23rd. Yeah, you're right. All right, so earnings so far in after hours have been pretty solid, man. Microsoft is the lagging one, but it's basically flat. So Teladoc did well, Snapchat did poorly, Microsoft did well, Google did really well. What else we have? We got Visa did well, PacWest did well, WAL did well. I think right now Teladoc, Waste Management, a few other ones. Microsoft's still surging up here, though. Looks good. Again, I'm not sure if it's going to hold, but I think we'll hold it at least for the next earnings call. Catch it back up on chat. I think Microsoft will go in profit, but it takes more time. What do you think about Meta tomorrow? Meta will be interesting. We'll stream the whole Meta call. Tomorrow's going to be a really busy day where we basically get no breaks. We are going to get up in the morning, stream the morning earnings, stream the morning economic data, which I believe is... trying to think, man. Tomorrow we got building permit new home sale data coming out. We also have for earnings specifically tomorrow morning, we got AT&T, Boeing, Coca-Cola, Tilray, Thermo Fisher, Hilton, CME Group, General Dynamics, Union Pacific, Hess, and more earnings tomorrow morning. And so that's a pretty big list, right? So we got those earnings in the morning that we're going to stream and cover everything on. And then we got the FOMC meeting at 2 p.m. Eastern Standard Time, or the FOMC rate hike decision at 2 p.m. and then the actual meeting at 2:30. And then we also, after that, have Meta earnings. And so we're going to go from the FOMC meeting with Big P, Jerome Powell, and then we're immediately going to pivot to the Meta earnings afterwards. And then after that, on Thursday morning, we have GDP data dropping, which is very relevant for obviously recession fears. People worried about a recession. A recession technical definition is 2 consecutive losing GDP quarters. So we got that going on. And then Friday we have PCE, the personal consumption expenditure, which is the Fed's preferred inflation gauge. So all of that stuff this week. It's a super busy week. And then outside of that, don't we have some earnings next week? I know we got PCE and GDP this week. I think next week we got non-farm data and unemployment, but I might be wrong there. We might have a quiet week too. Yeah, July 31st. Next week we have Uber earnings in the evening on Monday. Uber earnings on Monday. Or no, Tuesday before the bell we got Uber earnings. Tuesday evening we got AMD. That'll be big. So we're gonna stream that. So AMD earnings Tuesday evening. We also have MicroStrategy and Pinterest earnings Tuesday evening. Man, we just locked in a little bit more on Microsoft. Just took the profit, and we got a little piece left. So yeah, AMD morning, Tuesday morning, or Tuesday evening, and then CVS the next day, and then Humana the next morning, and then Wednesday we got Shopify, PayPal, Unity, Robinhood, Etsy. Not really anything big, but I think I think the next week here. Let me check. I'm trying to make sure. I'm trying to remember all the economic stuff we got. But yeah, next week. Nothing Monday. Manufacturing PMI and Jolts Tuesday. Wednesday. Non-farm productivity Thursday. So I think it's actually Wednesday. So challenger job cuts and non-farm productivity Thursday. As well as services PMI and manufacturing PMI Thursday. And then Friday, non-farm payrolls and unemployment. Okay, so yeah, that's the schedule. So my schedule was right. Yeah, I'm probably gonna get out the rest of this now and just maybe add some back when I dip. Google bounced it up, tested that high again at 131s. Yeah, we're gonna stream tomorrow's earnings too. No, CPI is not tomorrow morning, Stuart. Tomorrow we have the FOMC rate hike decision, which is big. How much do you need in your account to comfortably day trade? Stocks? 30K. The only thing I don't like about Moomoo is that I thought Microsoft did well. Why the negative drop? It's not really a negative drop. I like Moomoo. I wish their P&L calendar didn't take withdrawals into consideration. Like, I took out $400 just to test withdrawals because somebody was like, "Oh, have you ever tried getting money out of Moomoo?" And I was like, "Okay, well, let me test the wire." And then I got the wire same day. I put in the request at the morning. I got it by the afternoon. So withdrawing money is easy for Moomoo. But so shout out to that guy, whoever that was. But now it's acting like that's a $400 loss, which it wasn't. But that's the only problem. Moomoo great, honestly. Super useful. And again, if you want some free stocks, if you open up an account, deposit $100, you get 5 free stocks. You open up an account, deposit over 1,000, you get 15 free stocks. You open up an account, deposit over 5K, you get the previous 15 plus a free share of Google or Tesla. And I did get Tesla. Check out the link pinned to the top of the chat. You can also see it in the description if you're interested. Teledoc Why 30K? Is there a reason? Yeah, it's called the pattern day trading rules. It's PDT is what it's abbreviated as. It basically says that if you want to actively day trade more than 3 times a week with a margin account, you need at least 25 grand to do so. So you can't day trade more than 3 times a week with a margin account if you got less than 25K in your account, which is a ridiculous rule. They claim it's to help traders, but ultimately what it ends up doing is making new traders save up 30K and risk that for their first day trading experience, which is just a horrible idea. You know, it's really just to let the banks hold on to your money longer so they can earn interest is really what it is, but they'll never admit that. But regardless, I digress. But yeah, it's called the PDT rule. It's one of the reasons most people should be day trading futures. There's no PDT in futures. You can day trade short in futures without the restriction of the PDT rule. And, you know, one of my sponsors is TopStep. They're currently out right now with $49 base combine. So for $49, they're going to give you a demo account. If you can hit 3K in profit in that demo account without losing over 2K, so a 3-to-2 ratio, a reasonable ratio in futures, then they fund you 50K with a 90% split, and you get to keep your first $10,000 in profit. And when you day trade futures, you're basically day trading stocks. Like if I pull up the SPY right now, or if I pull up the E-mini, right? So the SPY, it's the same price action, basically. You can see it looks a lot like Microsoft or Google right now, and the patterns are very similar. And so you can effectively day trade futures with no PDT restrictions. There's better liquidity in futures than there are in stocks, and most day traders should be trading futures. But if you want to check it out, TopStep's the most legit one in the world. They pay out millions, fund thousands a year. Here's the link if you want to check it out. No, Robinhood has the PDT rule. Any U.S. regulated broker has the PDT rule. If you want to get around the PDT rule, you can trade futures. All right. Got about 40 minutes left until the earnings call. 40 minutes. We're all signed up and ready. We're just kind of sitting tight waiting. All right, so Microsoft's mostly still in that symmetrical triangle-like pattern, to be honest here. Look at this. It's basically the same symmetrical-like triangle. Looks like a Dorito. SPY popping up today, though. So, I mean, the market's doing all right. Here's Google. There's Google. It's at 131.10s, 131.12s. So... Which broker you use for execution, not just charting? Moomoo. I've been trading on Moomoo today. I just don't feel like showing y'all my account number. I can hide it. But yeah, I mean, here's my screen. But I don't really feel like showing y'all my account number, so... But yeah, Moomoo. You can see my position line. It literally showed my position line right here when I was in it. Google breaking highs, guys, up to 131.50. If you are enough profitable, you should take 100. Yeah. Robinhood offers cash accounts they can day trade. I don't think Robinhood has cash accounts that you can day trade on. Even if they do, you're going to be restricted by the T3 rule, or the T2 rule, I mean, which stands for transaction plus 2 days. So like, even if you have a cash account and there's no PDT rule, you have to follow what's called the T2 rule, which means that you have to wait. If you spend $1,000 in equity on one specific trade, you got to wait 2 days to get those funds, that $1,000 put back into your account. And so if you have a small account, you're going to be severely limited by that rule as well. So it's just incredibly difficult to freely day trade with less than 25K regarding stocks. Futures market, you can actively day trade as much as you want. Again, you can basically day trade the S&P or the NASDAQ or gold or currencies or all that different stuff, and there's just no restriction. And for that reason, if you want to day trade, I understand why some people might be biased towards stocks. It's so much easier to day trade futures in terms of restrictions. There's less restrictions there. And so it's what most people want to do. I Googled up to 131.70s. 131.70s. Well, sure, not with options, but the T2 rule still applies to options, and I don't think you can trade future or options with a cash account. I think you have to have a margin account on most platforms, at least. Also, do me a favor, hit the sub button if you haven't yet, guys. Hit the notification bell. We appreciate it. Should I move from Weeble to Moomoo? I don't like Weeble. Please advise me. I mean, Zaid, I don't know, man. I mean, number one, Moomoo is a sponsor of mine. And so, like, obviously, I'm going to tell you, yes, you know, if you want some free stocks, sign up to Moomoo. Again, they do give you the free stocks. So, I mean, of course, they're a sponsor of mine. Yes. I mean, but again, I'm going to preface it with I have no idea if it's going to be a better fit for you. I think it's a great platform. I think it's incredibly useful. And I think the tools that they have there are really, really nice. But it's subjective. It's opinion based. You know, check them out if you want. Yeah, but you're asking me an opinion-based thing in a definitive way, Zahid. So you know, I know you might follow me for the stream, and I understand that. But again, you're asking me, it's opinion-based. It's subjective. You know, so I like chocolate cake, but somebody else might hate chocolate cake. You know, so I can't say yes, the best thing for you to do is to switch. I can't say that. What I will say is I like Moomoo. I think Moomoo is really useful. There's zero commission in stocks. They're open the entire time pre-market, which I'm switching from TOS, and so I couldn't trade at 4 a.m. before. Now I can, or it's like 4:30. The tools on Moomoo are better, in my opinion, and I just like it better. But again, that's subjective. How big is the Dish news? What happened with Dish? I saw something about it earlier. Dish is said to start selling premium mobile service on Amazon. Again, I don't like Dish at all as a company long term. I think there's too much risk. I'm not saying it's going to go down, but the reason I don't like Dish is because, and I've gone through this argument many times this week, is because I think satellites are obsolete. I think nobody needs to use satellites anymore, specifically for cable, and Dish is a cable satellite provider. You don't need to strap a satellite dish, a big bulky satellite dish on your home anymore to get cable TV. Like, you just don't need that anymore. It's not necessary anymore. You can stream them. You can Hulu TV, YouTube TV, Fubo, Amazon Prime, you know, Netflix. Like, there's all these different options. HBO Max. Like, there's so many different options. You're gonna have more content for less than you're gonna pay on Dish satellite for cable. And so in that regard, I think you're going to see Dish over time just continue it, like, unless they branch out and start some other business, which is possible, but the risk is obvious, where it's like sometimes companies don't always succeed doing that. And so because of that, I don't really like Dish as a long-term company. Again, I'm not saying it's going to fail. I don't know, but I'm not putting my money in it long-term. I think there's just too much risk. I want sure things. And I certainly don't think Dish cable TV is one. Yeah, I understand technically, Joe, but again, I just don't trust it long term enough for me to want to buy it up. Maybe it might work out. I really don't know. Yeah, Disney Plus, yeah, all that stuff. So we ended up buying the dip yesterday in Disney. Our average price on Disney is $85.20. No, the earnings call is not going to be for another 30 minutes or so. What's your opinion on Disney? I think Disney is very beat down over the last year. And I think there's probably some objective value down here relative to their earnings. I think the PE ratio is not that bad. But again, I'm not sure. I think long-term Disney will be fine, probably. Again, maybe I'm wrong. I don't know. But I think long-term Disney will be fine. And short-term, I don't know. I don't know what they're going to do. Teledoc, yeah. Somebody said, is TDOC owned by Microsoft? Somebody else told me that. Again, the reason I don't trust Teledoc either is because they got big during the pandemic, and I think they got a lot of competition. I know when my son was sick and we didn't want to bring him to the doctor, we found a bunch of the different types of these services, not just with TDOC, but like multiple others. And so I think the saturation of competitors is going to be a tough road for Teledoc. But I don't know. To be fair, I don't know enough about the industry to say yes or no. And it did gap up from their earnings. So not my style, Glenn. Covered calls, yeah, just not really my style of trading. Teledoc holding though. Netflix all the way down at 420s. Microsoft's still starting to rip back up. Netflix has a nice little dip over the last 3 days. Is it time to buy that dip? I don't know. Netflix has gone from 211 to 427s over the last year. Man, that's a big gain. It's a little bit too extended, I think, for me up there. But let me know what you guys think. All right, Google breaking highs again at 132.60s right now. 132.60s. I'm in Snapchat. I forgot about that. All right, Snapchat hadn't really moved much. Yeah, a lot of phone doctors. Use Teledoc once, never going to use again. About a long call on Netflix. Hey, good luck. Yeah, I mean, The Little Mermaid did great. Puppies or whatever. I get it. People are biased against it, but like domestically, The Little Mermaid did 253 million. It's pretty big, you know. Internationally, they hit over 200 million, 212 million internationally. So yeah, the remake total has made 414 worldwide. So I think they did pretty good. The Little Mermaid did number 5 all-time domestic for remake movies. All-time domestic box office, they did number 103 in the ever. So I mean, they didn't do bad. Worldwide, number 8 all-time. So I mean, movies have been doing good. I know Oppenheimer's got some big hype around it right now. Barbie movie's got some big hype right now for it. What did AMC end up doing today? Still at 5. It's kind of slowed down some. Baymax. Yeah, I still got the Big Hero 6 mug. It's like a big Baymax mug. I don't know if y'all have seen it. What's your opinion on Meta where they follow Alphabet? I mean, they're going to be influenced by Google to a certain extent, but they're not going to they're not going to follow it like tick for tick, if that makes sense in trading. They're both tech, they're both social media to a certain extent, but Microsoft has a lot of other avenues for it. And Meta is up a lot, just like Google is. So I don't know. We'll see. You did the double feature. How was it? I heard Barbie was bad. Oppenheimer was good. But I think young people are going to see Barbie, which I guess is not a super shock. Gold going up today too. That's nice. We'll see if that continues. Again, I'm still in Snapchat. It's not really that bad right now. Again, we got about 25 minutes before the earnings call. You guys, 25 minutes. We'll stream the whole thing. Remind me to switch my headphones too. Barbie was funny. Disney's falling and yeah, I think Disney's unique movies did well. Like I think Snapchat bouncing back to 1040s. We'll see if that breaks back up. Yeah, the Google earnings calls right now. So we're watching this at 132s. Microsoft's bounced all the way back up too. And again, guys, if y'all want to break down on what's going on this week, watch this video right here. Like if you run a true recap of what's going on for the next few days, watch this video right here. All right, so there's the economic developments this week if you guys want to see it. Yeah, the actual call is going to be in about 25 minutes, team. In my honest opinion, Snap is a good one-year hold. Spotify has too much competition to interest me, and a TV series called A Small Light is one of the best things I've seen recently. Yeah, I mean, I don't know enough about Spotify to really say. I don't use Spotify enough to really say whether it's good business or not for long-term holding. I think Snapchat has enough daily active users, and I've interacted with it enough to understand, like, if it's going to hit 400 million daily active users next quarter, eventually they're going to figure out good ways to monetize it, and that might take time, but I think eventually they're going to get there. And so because of that, 10s is pretty cheap for Snapchat, I think, long term. But there's also possibility, of course, that it just dumps and goes against me. It's certainly possible as well, and I'm not sure what we're going to get. Google still pushing up. It's at 132.30s, 132.30s for Google. Remember, Meta earnings call tomorrow will be big. Are you a profitable trader? I mean, I don't really claim anything, man. I'm not claiming to be an expert. I'm not claiming to be a good trader. I don't sell a course, so I don't really have any, I don't need to show you guys or anything like that, or I'd rather not have the pressure of claiming to be some super profitable trader. What I will say is that in my TOS account, I'm green on the year in 2023. In my Moomoo account, in actual trading profits, so in both of these accounts, in actual trading profits, not deposits, in actual profits from trading, I'm green on the year in TOS. I'm green on the year in Moomoo, and so that's all I'll say. Snapchat, pull it back down to 1030s. I'm a user of Spotify, but then again, I agree Spotify having Apple's direct competitors bad. Yeah. Big news on the Snap call. Yeah, I think Zoom is dead from competition. I can agree with that. I think Zoom is in trouble. I'm not going to say it's dead. I think there might be a use, but I don't think there's a need for Zoom anymore. Because I think paying a monthly subscription for something that you can do so easily for free now is the big issue. I think you might need Zoom, and people still use Zoom and interact with Zoom, and organizations still might, there's an argument for their success long-term in that regard. But I think, I can stream on Discord. I can share my screen on Discord. I can share my screen on StreamYard. I can share my screen on Google, Google Meetup. I can share my screen basically on all these different avenues. And so Zoom and products like it, I think they might be in trouble long-term, but it depends on if they can get in front of it. Okay, so Kaz, you're basically just trolling here. Yeah. I was gonna say, Kaz says, "Hey, are you profitable?" I'm like, "Yeah, hey, I'm green on the year in actual trading profits on Moomoo. I'm green on the year in actual trading profits on Thinkorswim, which is TD Ameritrade." So that if somebody would follow with that, so no, you're not profitable. It's just like y'all aren't listening. But it's all good either way. Yeah, I mean, if I'm them, I'm saying AI a bunch. I just started trading last year, lost 20K, made 18 of it back so far. Nice, Glenn. Congrats, man. All right, guys, we got 20 minutes here. 20 minutes. Oh, dude, I'm tired, man. What's your opinion on Nvidia? I think Nvidia's up a lot, but it's a very strong company. Like, I think it's up so much that there's risks like buying it where we currently stand, because like the PE ratio for Nvidia right now is like 230s. Now there's a chance momentum will continue and that the PE ratio doesn't necessarily mean anything, but I think the next earnings call is incredibly relevant to Nvidia's future health. And I think for me right now, where Nvidia currently sits, I think it's a little bit too high up. I think it's going to correct to the downside. But again, it could very easily prove me wrong. It's very possible that this thing just pulls, like proves me wrong and just continues to rip. That's happened before. I'm sure it's not the last time it'll happen where I think something looks too extended and then it just kind of continues to keep ripping. But yeah. You basically said yes. Well, I mean, like I said, I said I'm green on the year in actual trading profits from in both of the major stock platforms that I use. So, I mean, in that regard, yes, this year I am currently green. But again, I don't want the pressure of claiming to be some super profitable trader. I think what happens is like people claim to be some super great trader, right? On YouTube. They say, "Oh, look how great I am. I'm just the greatest ever." Buy my course. They say they start selling a course for $500, $1,000, $2,000, and then they have a need to look profitable, or their course sales are going to dry up, right? And so even if they have a bad month or a bad week or a bad day, they're less likely to be real about it to their following because they're so desperate to sell courses that they kind of have to fudge their numbers a little bit. And I think over time people become more and more comfortable doing that, which just kind of is what I'm trying to avoid. Again, I don't sell a course. My channel's called Beginner Trading. I'm not trying to be some super expert. I'm not even like a sold day trader. Like my best trades are actually swing trades. So like I'm probably the most accurate with my swings. What this channel really does is mostly just report economic data. Like we mostly just cover economic data. That's usually kind of our bread and butter now. Is we stream earnings, we stream economics. No, it's all good, Kaz. Yeah, I mean, again, to put it into perspective, though, I make more money running this YouTube channel than I ever do trading, you know? But I mean, at a certain point, like, you got to have a reasonable expectation. I think some people are just bitter. And I'm not saying that's anybody here, but I think some people, for whatever reason, don't like to see other people make money. It makes them feel kind of jealous, maybe, or a little insecure. And so they might try to find fault where there shouldn't be. It's kind of like if I've always gave this example. It's kind of like if a mechanic starts a mechanic forum that starts to get some views, right? Say a mechanic starts a mechanic forum, before you know it, he's got 300,000 users in that mechanic forum. He might still be a mechanic, but he's going to make much more money from running that mechanic forum than he ever made as a mechanic. And can you really get mad at him for that? No, I don't think you can. I mean, I could try to gamble my accounts away and risk huge amounts of money just to look cool on the internet, but like in the end, I'd rather just be honest, and that's the honest answer, is that I certainly make more money running this channel than I do trading. But again, at a certain point, you gotta have a reasonable expectation. I think the people who are telling everybody they can get rich quick and they're just trying to throw big gains up on Twitter or whatever are just usually trying to sell you like a course. And I don't know, I couldn't sell a course right now if I wanted to. I've backed myself into a corner so much. Yeah, all good. Opinion on SoFi? I don't know enough about SoFi to really say. I've heard about it and I've watched it for years, but I don't know enough about the actual workings of the company to say I like it. Again, to me it seems like a mid cap that's incredibly risky and volatile. SoFi, if you look at the last few years, SoFi was at $25 in 21, It's now at $9. I just think there's a lot of risk, and I don't understand the business. I also see issues. Well, AMD's got one of the highest PE ratios right now of any company. Google's still popping up. It's at 132s. Again, you can also see Microsoft under the 200 EMA, but it's still trying to make moves. But yeah, I guess for AMD, I'm incredibly skeptical as well, because like AMD is risky because the PE ratio of AMD is like 300, or what is it, right? No. The PE ratio of AMD is like 600 right now. That's risky, man, for me. That's something that I'm not trying to play with, you know? You can't make money too easy, so when NVIDIA is easy to short, it keeps being one. Would be too easy. I wish the world governments would listen and get the world energy grid into a state of abundance. Yeah, but big oil runs the world, bro. It's a common truth. Big oil runs the world, dude. You might not think they do, but they do. How much a year? I'm not going to say. Unnecessary to say it. Never heard about ServiceNow. My man, what's your take about Meta earnings tomorrow? I'm going to cover Meta earnings. I don't know. I'm going to be watching Meta earnings very closely, and we're going to stream the whole thing, and that's going to be in between the FOMC meeting tomorrow as well. So we got a bunch of stuff dropping. The FOMC meetings tomorrow, remember? The FOMC meetings tomorrow afternoon. That's big. Going to be really interesting to watch. Yeah, for sure. All right, so again, Microsoft. Y'all be ready. Earnings call starts in 12 minutes. Did you buy Snap? I did. We haven't really moved much in our position over the last 30, 40 minutes. Mostly been pretty quiet. I got flushed out on Tesla earnings release last week, but made it all back on 265 calls about Monday at open. Now I'm here playing Microsoft. Hey, good luck, Andrew. Big oil is none. Does that chair have a toilet attached? Bro, I got the top 3 bladders of the world right now for sure. Definitely top 3 bladders of all time right now, dude. How often do y'all see me take a bathroom break? Never. You know, I've been slowly conditioning myself to just be the greatest bladder of all time. You know. Netflix on a little dip. Doesn't look bad. AMC dropping down. Where does Tesla go from here? I don't know. Tesla had a good day today, didn't it? The last time I looked at it, it was solid. It's at 266. Again, the earnings call for Microsoft is in about 10 minutes or so. The era of AI. All right, we got their web class live. Also, y'all give me a follow on Twitter if you have not already. We appreciate it. All right, guys. So again, Microsoft pretty quiet. Google still sitting at 132. Tesla up a little bit, but Tesla actually had a red day. I'm looking at it now. All right, looking at our poll, we had about 65% of people think that Microsoft was going to beat. They were right. Looking at our YouTube poll, we asked them, does Microsoft break 400 this year? 68% of people said yes, it does. Let me switch my headphones. You can use Blue Gaming. You can use there's a bunch of different. I use Earnings Whisper, Moo, Benzinga. You can use mostly any major stock platform to get the earnings. You know. And y'all help me out. Make sure y'all can hear the music. Here, hold on. Let me make sure. Hold on. Any reason why Meta is up? Well, Meta's probably up on Google numbers. Google's up a lot. You know, Meta looks like it started. Meta looks like it started its big crazy gap up from the Google earnings that dropped. So that's probably what it is. Hey, can y'all hear the music right now? Can y'all hear it right now? You should be able to, but I'm not 100% sure. Can y'all hear it right now? You should be able to. Google makes up 100% of your Roth IRA, $95 average. Hey, congrats, man. It's a good average. Top 3 bladders in the world right here for sure. But yeah, Meta over 300. Okay, y'all don't hear the music. Got you. Let me fix that. All right, there you go. What's up, son? All good, man. All right, now y'all should be able to hear the music. Let me know if you can. You should be. We're waiting in the Microsoft call right now. Sitting tight. Got about 6 minutes. Anything about Ford? Ford seems okay. You know, I think Ford is like a dividend-paying stock with a low PE ratio. It's pretty flat on the year, so I don't know how much of like the prospects of growth are. Does Ford have a good electric vehicle lineup? I don't know. I don't follow it close enough. All right, can y'all hear the music? All right, good. Pac West again. Well, Pac West is getting acquired by Somebody else. Oh, they're ripping up. Look at PacWest. PacWest is up to 1060s right now. Look at PACW. It is moving. 1050s currently. 1050s from PACW. That's a big move. Let me look the news up here. Something's going on. PacWest, the trading company, announced a merger with the Bank of California. We'll put this news up in chat so you guys can catch it. But look at PacWest rip up again. Merger. PacWest. The crazy thing is PacWest is technically green on the day. PacWest dropped from $10.50 down to $7.50. So PacWest dropped 25% today. All the way down to $7.50. The crazy thing is in after hours today, it rebounded all the way back and is technically green on the day at $11 a share, which is crazy, to be honest. But again, the acquisition by the Bank of California. I mean, sometimes there's not a reason. Stewart says, if you figured out why Microsoft went only down and did not go up after good earnings, there's never always a reason. Again, if it was as easy, guys, think about it like this, right? If making money, if the reactions to earnings reports were as simple as waiting for a company to beat on EPS and beat on sales, you could just buy it up. Everybody would be rich. I would be a billionaire right now if it was that easy. I would take the largest positions I could, wait for the numbers to come out, and just click buy. Like, it's just not that easy. One of the things you realize very quickly regarding earnings is that sometimes they're nonsensical. Sometimes they are sensical. You just don't know what the sense is. But a lot of the time they're nonsensical at all. Sometimes a company has great EPS, great sales, great guidance, and then drops. And then vice versa. Sometimes a company will have terrible EPS, terrible sales, terrible guidance, and then go up. And so you never really know. And so it's always something where, like, I'll react to earnings, but I'm not going to take the whole boat position, take a huge risk there. We talked about Dish. Yeah, we talked about it a little bit. Google earnings are in. Google earnings are already out. They dropped their earnings report at 4 p.m. and their conference call started about 30 minutes ago. You can snap back up to 1030. Let's see if it holds. All right, guys. 3 minutes. 3 minutes. We got the conference call started. PacWest ripping up. Does the Bank of Cali have a symbol? I have to look this up now. BANC, that's right. Yeah, they're doing really well as well. They're up to 1640. So PACW, the Bank of Cali. 1640s, big moves. All right, guys, numbers are about to drop. Earnings call is about to start right now. We got 2 minutes, 2 minutes. All right, guys, 2 minutes. BANC, the Bank of Cali, up to 1640s here. PacWest up to 1080s. Yeah, for sure, Kevin. Exactly. Yeah, if it was that easy to make money, I'd be rich easily. I'd just wait for a company to drop good numbers and then just click buy. Most has made huge moves this year, Microsoft. Yeah, so again, to understand the dynamic of this, there's probably a lot of extension heading into this report, especially like tech, Microsoft, AMD, Nvidia, Tesla, like they were all pretty extended this year. They've all moved up a lot this year. If you look at like just Microsoft's, for instance, right, we can look at a yearly chart here and you'll see just a huge move up this year. This is basically since January. Here's January right here. Let me show you guys this a little bit better. This is January right here. All right, so here's January. Or no, here's November. Here's January right here, right? So January to now has just had crazy increases, right? So to a certain extent, the argument is like, does this continue to go up? I don't know. Like, this move is huge. Look at this. That's a huge move this year. Bank of Cali just broke highs again. That's a huge move. And so again, even if the company does good for their earnings, and they did do well. Again, Microsoft, their largest quarterly revenue ever, right? That's a good number. But they're up so much this year, it's probably not going to cause the huge upward volatility that a lot of people want. And that's all right. All right, guys, 30 seconds, 30 seconds. Make sure you hit the live button next to the play button. Make sure you're caught up on stream. Again, you want your live button to look like this, okay? You want your live button to look like this. Here, you want your live button to look like this. Make sure your live button is red. You're fully caught up on stream. You want it to look like that right there. Let's get ready. I'm going to mute or I'm going to just turn the music off for now. And then we're going to mute the music for a second. And we're going to get ready to stream the call. All right, so we are waiting on hold for the call, guys. Waiting on hold for the call. I'm just going to put one big chart up here for Microsoft to be honest. All right, here we go.
Greetings and welcome to
Sound
the
check.
Microsoft
Let me know if you
Fiscal
can hear
Year
this well.
2023 fourth quarter earnings conference call. At this time, all participants are in a listen-only mode.
Sound check.
A question and answer session will follow the formal presentation. If anyone should require operator assistance during the conference, please press star 0 on your telephone keypad.
All right, guys.
As a reminder, this conference is being recorded. I would now like to turn the conference over to your host, Brett Iverson, Vice President of Investor Relations. Mr. Iverson, please go ahead.
Good afternoon, and thank you for joining us today. On the call with me are Satya Nadella, Chairman and Chief Executive Officer, Amy Hood, Chief Financial Officer, Alice Jalla, Chief Accounting Officer, and Keith Dolliver, Deputy General Counsel. On the Microsoft Investor Relations website, you can find our earnings press release and financial summary slide deck, which is intended to supplement our prepared remarks during today's call and provides the reconciliation of differences between GAAP and non-GAAP financial measures. More detailed Outlook slides will be available on the Microsoft Investor Relations website when we provide Outlook commentary on today's call. On this call, we will discuss certain non-GAAP items. The non-GAAP financial measures provided should not be considered as a substitute for or superior to the measures of financial performance prepared in accordance with GAAP. They are included as additional clarifying items to aid investors in further understanding the company's fourth quarter performance, in addition to the impact these items and events have on the financial results. All growth comparisons we make on the call today relate to the corresponding period of last year, unless otherwise noted. We'll also provide growth rates in constant currency when available, as a framework for assessing how our underlying businesses performed, excluding the effect of foreign currency rate fluctuations. Where growth rates are the same in constant currency, we'll refer to the growth rate only. We'll post our prepared remarks to our website immediately following the call until the complete transcript is available. Today's call is being webcast live and recorded. If you ask a question, it will be included in our live transmission, in the transcript, and in any future use of the recording. You can replay the call and view the transcript on the Microsoft Investor Relations website. During this call, we'll be making forward-looking statements, which are predictions, projections, or other statements about future events. These statements are based on current expectations and assumptions that are subject to risks and uncertainties. Actual results could materially differ because of factors discussed in today's earnings press release, in the comments made during this conference call, and in the risk factor section of our Form 10-K, Forms 10-Q, and other reports and filings with the Securities and Exchange Commission. We do not undertake any duty to update any forward-looking statement. And with that, I'll turn the call over to Satya.
Thank you very much, Brett. We had a solid close to our fiscal year. The Microsoft Cloud surpassed $110 billion in annual revenue, up 27% in constant currency, with Azure all up accounting for more than 50% of the total for the first time. Every customer I speak with is asking not only how, but how fast they can apply next-generation AI to address the biggest opportunities and challenges they face. and to do so safely and responsibly. To that end, we remain focused on three key priorities. First, helping customers use the breadth and depth of Microsoft Cloud to get the most value out of their spend. Second, investing to lead in the new AI platform shift by infusing AI across every layer of the tech stack. And third, driving operating leverage. Now I'll highlight examples of our progress, starting with infrastructure. Azure continues to take share as customers migrate their existing workloads and invest in new ones. We continue to see more cloud migrations as it remains early when it comes to long-term cloud opportunity. We're also seeing increasing momentum with Azure Arc, which now has 18,000 customers, up 150% year over year, including Carnival Corp, Domino's, Thermo Fisher. And Azure AI is ushering in new born-in-the-cloud AI-first workloads with the best selection of frontier and open models, including Meta's recent announcement supporting Llama on Azure and Windows, as well as OpenAI. We have great momentum across Azure OpenAI Service, more than 11,000 organizations across industries, including IKEA, Volvo Group, Zurich Insurance, as well as digital natives like Flipkart, Humane, Kahoot, Miro, Typeface use the service. That's nearly 100 new customers added every day this quarter. Mercedes-Benz, for example, is bringing ChatGPT via Azure OpenAI to more than 900,000 vehicles in the United States, making its in-car voice assistant more intuitive. And Moody's built its own internal copilot to improve productivity of its 14,000 employees. We're also partnering broadly to scale this next generation of AI to more customers. Snowflake, for example, will increase its Azure spend as it builds new integrations with Azure OpenAI, and KPMG has announced a multi-billion-dollar commitment to our cloud and AI services to transform professional services. Now on to data. Every AI app starts with data, and having a comprehensive data and analytics platform is more important than ever. Our intelligent data platform brings together operational databases, analytics, and governance so organizations can spend more time creating value and less time integrating their data estate. We introduced Microsoft Fabric this quarter, which unifies compute, storage, and governance with a disruptive business model. 1 month in, we are encouraged by early interest and usage. Over 8,000 customers have signed up to trial the service and are actively using it, and over 50% are using 4 or more workloads. All up, we once again took share with our analytics solutions with customers like Bridgestone, Chevron, and Equinor turning to our stack. Now on to developers. New Azure AI Studio is becoming the tool of choice for AI development in this new era, helping organizations ground, fine-tune, evaluate, and deploy models and do so responsibly. VS Code and GitHub Copilot are category-leading products when it comes to how developers code every day. Nearly 90% of GitHub Copilot signups are self-service, indicating strong organic interest and pull-through. More than 27,000 organizations, up 2x quarter over quarter, have chosen GitHub Copilot for Business to increase the productivity of their developers, including Airbnb, Dell, and Scandinavian Airlines. We're also applying AI across low-code, no-code toolchain to help domain experts automate workflows, create apps and web pages, build virtual agents, or analyze data using just natural language. Copilot in Power BI combines the power of large language models with an organization's data to generate insights faster, and Copilot in Power Pages makes it easier to create secure low-code business websites. One of our tools that's really taken off is Copilot in Power Virtual Agents, which is delivering one of the biggest benefits of this new era of AI, helping customer service agents be significantly more productive. HP and Virgin Money, for example, have both built custom chatbots with Copilot and Power Virtual Agents that were trained to answer complex customer inquiries. All up, more than 63,000 organizations have used AI-powered capabilities in Power Platform, up 75% quarter over quarter. Finally, Power Automate now has 10 million monthly active users at companies like Jaguar Land Rover, Repsol, Rolls-Royce, up 55% year over year. And we're going further with new process mining capabilities in Power Automate, which are helping organizations optimize business processes and in turn build their AI advantage. Now on to business applications. We are taking share in every category as we help organizations across the private and public sector, from Avis to Albertsons to Breville to Equinox and the U.S. Department of Veterans Affairs, transform their mission-critical business processes. All up, Dynamics surpassed $5 billion in revenue over the past fiscal year, with our customer experience, service, and finance and supply chain businesses all surpassing $1 billion in annual sales. This quarter, we brought Dynamics 365 Copilot to our ERP portfolio, including finance, project operations, and supply management. And with our new Microsoft Sales Copilot, sellers can ground their customer interactions with data from CRM systems, including both Salesforce and Dynamics, to personalize customer interactions and close more deals. Now on to our industry and cross-industry clouds. Our Microsoft Cloud for Sustainability is helping customers like Costco, Land O'Lakes, and REI take action to meet their environmental goals. And in healthcare, hundreds of organizations are using our Nuance DAX ambient intelligence solution to automatically document patient encounters at the point of care. This quarter, we expanded our collaboration with Epic to integrate Nuance DAX Express directly into their industry-leading EHR system. Now on to future of work. Across industries, customers like Ahold Delhaize, Deutsche Bank, Novartis, Siemens, Wells Fargo are choosing Microsoft 365 premium offerings for differentiated security, compliance, voice, and analytics value. And 4 months ago, we introduced a new pillar of customer value with Microsoft 365 Copilot. We are now rolling out Microsoft 365 Copilot to 600 paid customers through our early access program, and feedback from organizations like Emirates, NBD, General Motors, Goodyear, and Lumen is that it's a game changer for employee productivity. We continue to build momentum in Microsoft Teams across collaboration, chat, meetings, and calling. We now have more than 1,900 apps in Teams App Store, and companies in every industry, from British Airways to Dentsu to Eli Lilly and Manulife, have built over 145,000 custom line of business apps, bringing business process directly into the flow of work. 5 months in, Teams Premium has already surpassed 600,000 seats as companies like BNY Mellon, Clifford Chance, PepsiCo, and Starbucks chose the add-on for advanced features like end-to-end encryption and real-time translation. Teams Phone is the market leader in cloud calling with more than 17 million PSTN users, up 45% year over year. Teams Room is used by more than 70% of the Fortune 500, including L'Oreal, United Airlines, and US Bank, and revenue more than doubled year over year this quarter. And with Microsoft Viva, we are creating a new market category for employee experience. Viva now has 35 million monthly active users as companies like CBRE, Fujitsu, and Unisys turn to the platform to build data-driven high-performance organizations. Now on to Windows. The number of devices running Windows 11 has more than doubled in the last year, and we are seeing continued growth in Windows 11 commercial deployments worldwide by companies like AT&T, Kronos, and Westpac. We're also transforming how Windows is experienced and managed for enterprise customers with Azure Virtual Desktop and Windows 365, which together surpassed $1 billion in revenue for the first time over the past 12 months. Enbridge, Eurowings, Marriott International, and TD Bank Group, for example, all chose cloud-delivered Windows this quarter. Windows 11 is also rapidly becoming a powerful new canvas in this new era of AI. We introduced Windows Copilot this quarter, helping every Windows 11 user become a power user with just natural language, and are excited to put it in the hands of more people in the coming months. Now on to security. More than 1 million organizations now count on our comprehensive AI-powered solutions to protect their digital estate across clouds and endpoint platforms, up 26% year over year. More than 60%, including leading enterprises like ABN AMRO, Dow, and Heineken, use 4 or more of our security products, up 33% year over year, underscoring our end-to-end differentiation. And we once again took share across all major categories we serve as we innovate to protect customers. In identity, Microsoft Entra ID has more than 610 million monthly active users, and we are adding SSE to our Entra product family to complement our leading identity solution and secure access to any app or resource from anywhere. Finally, our Security Copilot, the first product to apply this next generation of AI to SecOps, will be available to customers via a paid early access program this fall. Now on to LinkedIn. LinkedIn's revenue surpassed $15 billion for the first time this fiscal year, and membership growth has now accelerated for 8 quarters in a row, a testament to how mission-critical the platform has become to help more than 950 million members connect, learn, sell, and get hired. Our talent solutions business surpassed $7 billion in revenue for the first time over the past 12 months, and our hiring business took share for the 4th consecutive quarter. We continue to use AI to help our members and customers connect to opportunities and tap into experiences of experts on the platform. Our AI-powered collaborative articles are now the fastest growing traffic driver in LinkedIn. And finally, we are helping LinkedIn stay trusted and authentic. More than 7 million members have verified who they are or where they work, many using new integrations with Microsoft Entra as well as Clear and HyperVerge. Now on to search, advertising, and news. While it's early in our journey, we are reshaping daily search and web habits with our Copilot for the web. This quarter, we introduced new AI-powered features, including multimodal capabilities with visual search and Bing Chat. We're expanding to businesses with Bing Chat Enterprise, which offers commercial data protection, providing an easy on-ramp for any organization looking to get the benefit of this next generation of AI today. Bing is also the default search experience for OpenAI's ChatGPT, bringing timelier answers with links to our reputable sources to ChatGPT users. To date, Bing users have engaged in more than 1 billion chats and created more than 750 million images with Bing Image Creator, and Microsoft Edge took share for the 9th consecutive quarter. More broadly, we are growing our ad network, which is now available in 187 markets spanning search, display, native, retail media, video, and connected TV. Now on to gaming. Last week, we extended our Activision Blizzard merger agreement deadline to October. We continue to work through the regulatory approval process and remain confident about getting the deal done. We are committed to bringing more games to more players everywhere. Great content is key to our approach, and our pipeline has never been stronger. We announced our most ambitious lineup of games ever at our showcase last month, including 21 titles that will be available via Xbox Game Pass. And we're looking forward to the release of Starfield this fall, Bethesda's first new universe in 25 years. All up, we set new 4th quarter highs for monthly active users driven by strength off console as well as monthly active devices. And we saw record 4th quarter engagement across Game Pass with hours played up 22% year over year. And just last week, we announced Game Pass Core, bringing together online play from Xbox Live and content from Game Pass into a single offering. In closing, I'm energized about the opportunities ahead. We continue to innovate across the tech stack to help our customers thrive in the new era of AI. And with that, let me turn it over to Amy.
Thank you, Satya, and good afternoon, everyone. This quarter, revenue was $56.2 billion, up 8% and 10% in constant currency. Earnings per share was $2.69 and increased 21% and 23% in constant currency. In our largest quarter of the year, results exceeded expectations with focused execution by our sales and partner teams. These execution efforts led to share gains again this quarter in Azure, Dynamics, Security, and Edge. In our commercial business, we continued to see healthy renewal strength, which includes our upsell and attach motions, particularly with Microsoft 365 E5. Growth of new business continued to be moderated for products sold outside the Microsoft 365 suite, including standalone Office 365, EMS, and Windows commercial products. As expected in Azure, we saw a continuation of the optimization and new workload trends from the prior quarter. In our consumer business, the PC market overall was in line with expectations, although the early timing of back-to-school inventory builds benefited Windows OEM. Advertising spend was slightly lower than anticipated, which impacted search and news advertising and LinkedIn marketing solutions. Commercial bookings decreased 2% and 1% in constant currency, in line with expectations, against a prior year comparable that was our largest commercial bookings quarter ever. In addition, to the healthy execution across our renewal sales motions mentioned earlier, we saw a record number of $10 million plus contracts for both Azure and Microsoft 365. And the average annualized value for our large long-term Azure contracts was the highest it's ever been, driven by customer demand for our innovative cloud solutions today, as well as interest in AI opportunities ahead. Commercial remaining performance obligation increased 19% and 18% in constant currency to $224 billion. Roughly 45% will be recognized in revenue in the next 12 months, up 13% year over year. The remaining portion, which will be recognized beyond the next 12 months, increased 22%. And this quarter, our annuity mix increased to 97%. FX impact on total company revenue, segment level revenue, and operating expense growth was as expected. FX decreased COGS growth by 1 point favorable to expectations. Microsoft Cloud revenue was $30.3 billion and grew 21% and 23% in constant currency, slightly ahead of expectations. Microsoft Cloud gross margin percentage increased roughly 3 points year over year to 72%, also slightly ahead of expectations. Excluding the impact of the change in accounting estimate for useful lives, Microsoft Cloud gross margin percentage increased slightly, driven by improvements in Office 365, partially offset by lower Azure margin and the impact of scaling our AI infrastructure to meet growing demand. Company gross margin dollars increased 11% and 13% in constant currency, including 2 points due to the change in accounting estimate. Gross margin percentage increased year over year to 70%. Excluding the impact of the change in accounting estimate, gross margin percentage increased slightly, driven by improvements in Office 365. Operating expense increased 2% in line with expectations, as savings across the company from our focus on prioritization and efficiency were offset by the charge related to the Irish Data Protection Commission matter. At a total company level, headcount at the end of June was flat compared to a year ago. Operating income increased 18% and 21% in constant currency, including 4 points due to the change in accounting estimate. Operating margins increased roughly 4 points year over year to 43%. Excluding the impact of the change in accounting estimate, operating margins increased roughly 2 points, driven by improved operating leverage through disciplined cost management. Now, to our segment results. Revenue from productivity and business processes was $18.3 billion and grew 10% and 12% in constant currency, ahead of expectations, with better than expected results in Office Commercial, partially offset by LinkedIn. Office Commercial revenue grew 12% and 14% in constant currency. Office 365 commercial revenue increased 15% and 17% in constant currency, a bit better than expected, with particular strength in E5 upsell at renewal noted earlier. Paid Office 365 commercial seats grew 11% year over year, with installed base expansion across all workloads and customer segments. Seat growth was again driven by our small and medium business and frontline worker offerings. Office commercial licensing declined 20% and 18% in constant currency, with better than expected transactional purchasing. Office consumer revenue increased 3% and 6% in constant currency, with continued momentum in Microsoft 365 subscriptions, which grew 12% to 67 million. LinkedIn revenue increased 5% and 7% in constant currency, driven by growth in talent solutions, with some continued bookings impact from the weaker hiring environment in key verticals. Growth was partially offset by a decline in marketing solutions due to the lower ad spend noted earlier. Dynamics revenue grew 19% and 21% in constant currency, driven by Dynamics 365, which grew 26% and 28% in constant currency, with continued healthy growth across all workloads. Segment gross margin dollars increased 14% and 16% in constant currency, and gross margin percentage increased roughly 3 points year over year. Excluding the impact of the change in accounting estimate, gross margin percentage increased roughly 1 point, driven by improvements in Office 365. Operating expenses decreased slightly, and operating income increased 25% and 29% in constant currency, including 3 points due to the change in accounting estimate. Next, the Intelligent Cloud segment. Revenue was $24 billion, increasing 15% and 17% in constant currency, slightly ahead of expectations. Overall, server products and cloud services revenue increased 17% and 18% in constant currency. Azure and other cloud services revenue grew 26% and 27% in constant currency, including roughly 1 point from AI services, as expected. In our per-user business, the enterprise mobility and security install base grew 11% to over 256 million seats, with impact from the continued growth trends in new business noted earlier. In our on-premises server business, revenue decreased 1% and was relatively unchanged in constant currency, driven by a slight decrease in new annuity contracts, which carry higher in-period revenue recognition. Enterprise services revenue grew 4% and 5% in constant currency, with better than expected performance across enterprise support services and industry solutions. Segment gross margin dollars increased 16% and 17% in constant currency, and gross margin percentage increased slightly. Excluding the impact of the change in accounting estimate, gross margin percentage declined roughly 2 points, driven by sales mix shift to Azure and the lower Azure margin noted earlier. Operating expenses increased 10%. Operating income grew 20% and 22% in constant currency, with roughly 6 points from the change in accounting estimate. Now to more personal computing. Revenue was $13.9 billion, decreasing 4% and 3% in constant currency above expectations, driven by better than expected performance in Windows, partially offset by gaming. Windows OEM revenue decreased 12% year over year, ahead of expectations due to 7 points of benefit from early back-to-school inventory builds, while the overall PC market was as expected. Devices revenue decreased 20% and 18% in constant currency, roughly in line with expectations. Windows commercial products and cloud services revenue increased 2% and 3% in constant currency, ahead of expectations due to the renewal strength noted earlier, even with the moderated growth of new business and standalone offerings. Search and news advertising revenue ex-TAC increased 8%, a bit behind expectations due to the lower ad spend noted earlier. Higher search volumes, share gains again this quarter for our Edge browser, and the benefit from the Xandr acquisition were partially offset by the impact from third-party partnerships. And in gaming, revenue increased 1% and 2% in constant currency, lower than expected due to weakness in first-party and third-party content performance. Xbox content and services revenue increased 5% and 6% in constant currency, and Xbox hardware revenue declined 13%. Segment gross margin dollars declined 2% and were relatively unchanged in constant currency, and gross margin percentage increased roughly 1 point year over year, driven by sales mix shift to higher margin businesses. Operating expenses declined 9% and 8% in constant currency. Operating income increased 4% and 6% in constant currency. Now, back to total company results. Capital expenditures, including finance leases, were $10.7 billion to support cloud demand, including investments in AI infrastructure. Cash paid for PP&E was $8.9 billion. Cash flow from operations was $28.8 billion, up 17% year over year, as strong cloud billings and collections were partially offset by a tax payment related to the R&D capitalization provision. Free cash flow was $19.8 billion, up 12% year over year. Excluding the impact of this tax payment, cash flow from operations increased 22%, and free cash flow increased 19%. This quarter, other income and expense was $473 million, higher than anticipated, driven by net gains on foreign currency remeasurement. Our effective tax rate was approximately 19%. And finally, we returned $9.7 billion to shareholders through share repurchases and dividends, bringing our total cash return to our shareholders to over $38 billion for the full fiscal year. Now, let's turn to next fiscal year and start with a few reminders. First, the change in accounting estimate for the useful life of server and network equipment resulted in $3.7 billion of depreciation expense shifting from FY23 to future periods. Our FY23 operating income and margins benefited from this change in accounting estimate, and that will be a headwind to growth in FY24 as the benefit reduces to $2.1 billion. Next, my outlook commentary for both the full year and next quarter is on a US dollar basis unless specifically noted otherwise. And my outlook does not include any impact from the Activision acquisition, which we continue to work towards closing, subject to obtaining required regulatory approvals. Now, for some thoughts on the full year of FY24. With the weaker US dollar and assuming current rates remain stable, we expect FX to increase full-year revenue growth by approximately 1 point, with no impact to COGS or operating expense growth. The impact in H1 is expected to be greater than H2. At a total company level, revenue growth from our commercial business will continue to be driven by the Microsoft Cloud and will again outpace the growth from our consumer business. Even with strong demand and a leadership position, growth from our AI services will be gradual as Azure AI scales and our copilots reach general availability dates. So, for FY24, the impact will be weighted towards H2. To support our Microsoft Cloud growth and demand for our AI platform, we will accelerate investment in our cloud infrastructure. We expect capital expenditures to increase sequentially each quarter through the year as we scale to meet demand signals. We are committed to driving operating leverage, and therefore, we will manage our total cost growth across COGS and operating expense in line with the demand signals we see, as well as revenue growth. Increased capital spend will drive higher COGS growth than in FY23, and FY24 operating expense growth will remain low as we prioritize our spend. Therefore, we expect full-year operating margins to remain flat year over year, even with the headwind from the change in accounting estimate. And finally, we expect our FY24 tax rate to be around 19%. Now, to the outlook for the first quarter. First, FX. Based on current rates, we expect FX to increase total revenue and operating expense growth by approximately 1 point, with no impact to COGS growth. Within the segments, we expect FX to increase revenue growth in Intelligent Cloud by 1 point, with no impact to productivity and business processes or more personal computing. In commercial bookings, strong execution across our core annuity sales motions, including our renewal and upsell motions, along with long-term Azure commitments, should drive healthy growth on a growing expiry base. Microsoft Cloud gross margin percentage should decrease roughly 1 point year over year, driven by the accounting estimate change headwind noted earlier. Excluding that impact, Q1 cloud gross margin percentage will be up roughly 1 point, primarily driven by improvements in Azure and Office 365, partially offset by sales mix shift to Azure and the impact of scaling our AI infrastructure to meet growing demand. We expect capital expenditures to increase sequentially on a dollar basis, as noted earlier, driven by investments in our AI infrastructure. Reminder, there can be normal quarterly spend variability in the timing of cloud infrastructure build-out. Next, the segment guidance. In productivity and business processes, we expect revenue to grow between 9 and 11%, or $18 to $18.3 billion. In Office Commercial, revenue growth will again be driven by Office 365, with seat growth across customer segments and ARPU growth through E5. We expect Office 365 revenue growth to be roughly 16% in constant currency. In our on-premises business, we expect revenue to decline in the low 20s. In Office Consumer, we expect revenue growth to be in the low to mid-single digits, driven by Microsoft 365 subscriptions. For LinkedIn, we expect revenue growth in the low to mid-single digits. Even with share gains in our hiring business, growth will continue to be impacted by the overall markets for recruiting and advertising, especially in the technology industry, where we have significant exposure. And in Dynamics, we expect revenue growth in the mid to high teens, driven by continued growth in Dynamics 365. For Intelligent Cloud, we expect revenue to grow between 15 and 16%, or 14 and 15% in constant currency. Revenue should be $23.3 to $23.6 billion. Revenue will continue to be driven by Azure, which, as a reminder, can have quarterly variability primarily from our per-user business and from in-period revenue recognition, depending on the mix of contracts. In Azure, we expect revenue growth to be 25 to 26% in constant currency, including roughly 2 points from all Azure AI services. Growth continues to be driven by our Azure consumption business, and we expect the trends from Q4 to continue into Q1. Our per-user business should continue to benefit from Microsoft 365 suite momentum, though we expect continued moderation in growth rates given the size of the installed base. In our on-premises server business, we expect revenue to decline low to mid-single digits against a prior comparable that benefited from annuity purchasing ahead of the SQL Server 2022 launch. And in enterprise services, revenue should decline low to mid-single digits year over year, as growth in enterprise support services will be more than offset by a decline in industry solutions. In more personal computing, We expect revenue of $12.5 to $12.9 billion US dollars. Windows OEM revenue should decline low to mid-teens, including 5 points of negative impact from the earlier back-to-school inventory builds that were pulled into the fourth quarter. Our guide assumes no significant changes to the PC demand environment. In devices, revenue should decline in the mid-30s due to the overall PC market and adjustments we made in our portfolio with an increased focus on our higher margin premium products. In Windows commercial products and cloud services, customer demand for Microsoft 365 and our advanced security solutions should drive revenue growth in the mid to high single digits. Search and news advertising ex-TAC revenue growth should be mid to high single digits, roughly 5 points higher than overall search and news advertising revenue, driven by continued volume strength supported by Edge browser share gains. Growth will continue to be impacted by the advertising spend environment and third-party partnerships mentioned earlier. We continue to be excited by Bing usage signals and the longer-term opportunity as we invest in AI. And in gaming, we expect revenue growth in the mid-single digits. We expect Xbox content and services revenue growth in the mid to high single digits, driven by first-party and third-party content, as well as Xbox Game Pass. Now back to company guidance. We expect COGS between 16.6 to 16.8 billion US dollars and operating expense of 13.5 to 13.6 billion US dollars. Together, total cost growth should be around 6%. Other income and expense should be roughly $300 million as interest income is expected to more than offset interest expense. 2 reminders. This does not include any impact from Activision on interest income and expense, and we are required to recognize mark-to-market gains or losses on our equity portfolio, which can increase quarterly volatility. We expect our Q1 effective tax rate to be around 19%. And finally, as a reminder for Q1 cash flow, we expect to make a $2.7 billion cash tax payment related to the TCJA transition tax. We do not expect a payment related to the R&D capitalization provision in Q1. In closing, as a company, we delivered on the FY23 financial commitments we discussed a year ago on revenue and operating margin. A focus on operational excellence allowed us to achieve these targets while we delivered near-term value to customers and prioritized our investments to continue to lead in the future. As we start FY24, we are excited for the opportunities ahead and remain focused on delivering the 3 key priorities Satya mentioned. We'll maintain our lead as the top commercial cloud by helping customers use the breadth and depth of the Microsoft Cloud. We'll continue to invest in our cloud and AI infrastructure while scaling with growing demand so we can lead the AI platform wave. And finally, we'll align our costs with growth as we are committed to driving operating leverage. With that, let's go to Q&A, Brett.
Thanks, Amy. We'll now move over to Q&A. Out of respect for others on the call, we request that participants please only ask one question. Joe, can you please repeat your instruction?
Yes. Ladies and gentlemen, if you would like to ask a question, please press star 1 on your telephone keypad, and a confirmation tone will indicate your line is in the question queue. You may press star 2 if you would like to remove your question from the queue. For participants using speaker equipment, it may be necessary to pick up your handset before pressing the star keys. One moment, please, while we pull for questions. And our first question comes from the line of Keith Weiss with Morgan Stanley. Please proceed.
Excellent. Thank you guys for taking the question, and a very nice end to a great fiscal year. Satya, you started out your comments talking about how every customer conversation has the customer asking you about utilizing generative AI technology and how fast they could utilize that generative AI technology. What's the answer? What do you tell them in terms of the pace with which that could get into the marketplace and your customers can start using it? And then for Amy, how should investors think about just the fundamental gross margins behind these generative AI technologies? We understand there's going to be a lot of CapEx to ramp up underneath these, but what should we expect in terms of what the ultimate gross margin looks like underneath all these new generative AI solutions? Thank you.
Thank you, Keith, for the question. The fundamental guidance and conversation that we have with customers is twofold. One is the easiest path to value out of generative AI is to adopt certain solutions. For example, GitHub Copilot, in some sense, is sort of the no-brainer to add productivity leverage for all of the software developers in any organization, whether you're a bank, you're a retailer, or you're a software company. It applies to everyone. So that's probably one of the things that we are seeing very good, even productivity data and great adoption. And then obviously the excitement that there is already around the M365 Copilot. So first thing we sort of talk about is how we ourselves are deploying all these Copilots across, whether it's Sales Copilot or M365 Copilot or GitHub Copilot. How do you get maximum value out of these horizontal tool chain? And then on top of that, we have taken what we did underneath these products and built it out as a first-class tech stack, right, which we talked at our developer conference called the Copilot Stack. And then with Azure AI tooling, made it possible for someone like Moody's to build their own Copilot for their people. So to us, we want to be able to help customers build their generative AI applications on top of Azure AI. And with speed, if you will. And so those are the two things that we ask them to identify where they can get the maximum productivity leverage. And then we even swarm with our own resources to help them, get those things done. And the last comment I'd make is the cloud and data in the cloud enables all this, because I think the diffusion cycle here is, in some sense, we have a new set of cloud meters that are getting adopted faster because of everything else that came before it in the cloud. So those would be the observations.
And to your question, Keith, on gross margins and how I think about those going forward, the first thing I would say is that I expect gross margins here to transition over time, just like they did in the prior cloud transition. I would also say I expect workloads and the gross margins of the workloads to be different, just like they are in the cloud today. I would also add one thing that's different than last time, we've talked a bit about this before, is that we start out in a different place with more of a shared platform, which allows us to scale those gross margins a bit faster than last time. And we do expect, as you asked and Satya talked about, the pace of this adoption curve, we do expect to be faster. So you're seeing the CapEx spend accelerate in Q4 and then again in Q1, and we've talked about what it should look like the rest of the year. Now, that being said, we're talking about all that and going through that transition while delivering in FY24 over FY23, effectively a point higher operating margins. Because if it's flat year over year as we guided, with the headwind from the useful life change, when you correct for that, it's about a point higher. So I think the real focus here is being able to be aggressive in meeting the demand curve and focusing on the transition and growth in gross margins and delivering the operating leverage.
Excellent. Thank you, guys.
Thanks, Keith. Operator, next question, please.
Our next question comes from the line of Brent Thill with Jefferies. Please proceed.
Thank you. Satya, on the optimization headwinds that you continue to see, when do you think we hit peak optimization? Are we getting close to hitting that peak and getting some relief in the back half of the year, and maybe AI helping provide as a tailwind? Any color from what you're seeing from your perspective would be helpful.
Sure, Brent. Thank you for the question. A couple of observations. One is, I think overall in the cloud, you do see new project starts, and then those project starts get optimized, and then you sort of time series all of that, and that's sort of what you see in the normal course. What happened here was during the pandemic, obviously there were lots of new project starts, and optimization in some sense was postponed, and that's where you're seeing, I'll call it catch-up optimization. And that's something that, to your point, we will lap going into the next couple of quarters. I think it will come down. And we are seeing new project starts, both traditional type of project starts, even cloud migrations, data applications, and of course, obviously the AI applications. But we'll get back to, I'll call it, the normal pace of new project starts and optimizations going forward, but we will cycle through, I think, in the next couple of quarters, what is the last catch-up optimization.
I would just add, Brent, I think to Satya's point, and maybe to build a bit of a line for you, I think it felt very similar to last quarter where we made the same comments, which is we're seeing sort of the normal optimization, plus we're seeing new workload starts across these workloads Satya talked about. And I think that's what we're saying going forward. And really what the change is just that lapping of, I think, a bit of the catch up from a year ago. And you're right, we'll continue to do that through H2.
Thanks, Brent. Operator, next question, please.
The next question comes from the line of Mark Mordler with Bernstein Research. Please proceed.
Thank you very much for taking the question, and congrats on the quarter. Amy, CAC bucks moved up significantly Q over Q and year over year, and it's increasing moving forward. Can you give us some color? Is it physical data centers? Is this predominantly servers? Is it predominantly AI driven? How should we think about the useful life of it? And then quickly for Satya, can you give us some where we're status on the general availability of the full Copilot development stack and how long it's taking clients and partners to build Copilots? Thanks.
Well, I start on the CapEx question, Satya, then I'll turn it over to you. Mark, really, first of all, both in Q4 and then talking about Q1, the acceleration is really quite broad. It's both on both the data centers and the physical basis, plus CPUs and GPUs and networking equipment. Think of it in a broad sense as opposed to a narrow sense. So it's overall increases of acceleration of overall capacity. And I think if you look back over really FY23, you wouldn't have seen some of the pace on normal, what I would say, capacity adds, even for the normal Azure workloads. So you're seeing both accelerations, the normal Azure workloads plus some of the AI workloads is partially the reason. So it's why I do comment quite often that it's both overall commercial cloud demand and building out capacity for AI. It's both.
Yeah, and I think just for perspective, I think it's sort of always good to think about it, right, where we have a 111 billion commercial cloud business growing at 22% year over year, and then you had a CapEx growth, which was around the same number, 23-24%. So in some sense, it's sort of replacement capital plus some new capital that is going to drive new growth. So that's, I think, the scale, and we feel good about that structure of overall growth rates and how it translates into future TAM opportunity for us. So to your other question on how all this translates into project starts effectively, the Copilot stack is available today on Azure. So we have everything from Azure AI toolchain, where you can use obviously Azure OpenAI, or even you can use open models from Llama and other Hugging Face models. You have all the fabric and all of our operational data stores for what is one of the most useful patterns around generative AI is what is called retrieval augmented generation, which is you take the data that you have in the data stores, use it in a prompt to generate completions, summaries, what have you. And so that's something that we're seeing a lot of, and the Copilot are fundamentally orchestrations of that. And so we have all of these services available. We see the thing that's fascinating is when you use something like Power Virtual Agent, you have a low-code, no-code tool to build effectively these AI products, or full-fledged Copilots like we've built. And all of the underlying primitives for that are available on Azure. The tool chain is available on Azure, and the speed with which customers are able to deploy them, ISVs are able to build them, is pretty impressive.
Thank you. I appreciate it.
Thanks, Mark. Operator, next question, please.
The next question comes from the line of Kash Rangan with Goldman Sachs. Please proceed.
Hi, thank you very much. Congratulations on the quarter. If I could, I just wanted to get your thoughts, shift the discussion away from COGS and the CapEx to more of the top-line outlook. It looks like Azure growth rate is definitely starting to stabilize, and generative AI contribution to Azure is measurably improving quarter by quarter, and optimization in a broader sense is also starting to settle down. Where does this leave with the company's outlook for Azure growth rate in the future quarters? Are we at a point where we've bottomed out and we could start to see some acceleration due to the trends we discussed? And also, if you take the superset of Microsoft Cloud, when you throw in the new pricing for Copilot, it certainly looks like the TAMs are opening up in a pretty significant way. So when you take that broader lens, that 21-22% growth rate that Satya and Amy referred to, what could be the outlook? Could we be too optimistic and entertaining hopes of some kind of acceleration in the years ahead, or how do you think about the outlook on the top line? Thank you so much.
Sure, Kash. Good. Thanks for the question. So maybe I'll start, and then Amy, you can add, because I think we do think about what's the long-term TAM here, right? I mean, you heard me talk about this as a percentage of GDP, what's going to be tech spend. And if you believe that, let's say, the 5% of GDP is going to go to 10% of GDP, maybe that gets accelerated because of the AI wave. Then the question is how much of that goes to the various parts of our commercial cloud, and then how competitive are we in each layer, right? So if you sort of break it down, you talked about how with Microsoft 365, we think of this Copilot as a third pillar, right? We had the creation tools. We then had all the communication and collaboration services, and we think the AI Copilot is a third pillar. So we're excited about it. Amy talked about how we want to get it out first as part of this preview, and then in the second half of the next fiscal year, we'll start getting some, of the real revenue signal from it. So we're looking forward to it, but we think of it long term as a third pillar, like we thought about, something like, say, Teams or SharePoint back in the day or what have you. Then Azure, the way I think about it is we still are, inning 2 or inning 3 of even the cloud migration, especially if you view it, right, whether by industry moves to the cloud, segment move to the cloud, as well as country adoption of the cloud, right? So there's still, early innings of the cloud migration itself, so there's a lot there still. And then on top of that, there is this complete new world of AI driving a set of new workloads. So we think of that, again, being pretty expansive from a TAM opportunity, and we'll play it out. So, but at the same time, as we are $11 billion commercial cloud that is grown, high in 20s, and so therefore we do hit law of large numbers. But that said, we do think that this is a business that can have sustained high growth, which is something that we're excited about.
And I think the only thing, Kash, I would add is, I think in some ways what we're really pointing to is there's a process here. We see the demand signals quite strong. It remains strong. I'm thrilled with all the product announcements we've made. I'm thrilled with them moving to preview and then moving to GA. They absolutely are expansive in terms of addressable market. They reach new budget pools is almost the way I talk about it a lot in terms of how CIOs or CFOs that I talk to think about that investment. So a growing opportunity. And as you know, we're focused on executing against that, and then revenue is an outcome. But it certainly does require, the demand signal requires the capital expense and then creates the opportunity. And that's why I think in some ways we're spending a little more time talking about some of that investment, is because it is the demand signal.
Awesome. Thank you so much.
Thanks, Kash. Operator, next question, please.
Our next question comes from the line of Karl Keirstead with UBS. Please proceed.
Okay, great. Amy, if I could double click a little bit on the exciting news around M365 Copilot as everybody on the line looks to layer that opportunity into our models. I just wanted to get your views. Are there any guardrails you'd offer us to sort of keep us in line? Is there a degree of gross margin pressure in the Office segment? In other words, is it a fairly cost-intensive new product that we should keep in mind? And also, could it pull along Azure in the sense that you need Azure AD and perhaps some of the other cybersecurity products. So a little color there might help everybody with their modeling exercise tonight and in the coming weeks.
Thanks, Carl. I think maybe I'll first start with the process we have when we release new products. And I absolutely understand we are excited too by the demand signal, the customer reaction, really the requests we're getting to be in the paid preview. It's all encouraging. As you know, last week we announced pricing. Then we'll continue to work through the paid preview process, get good feedback. Then we'll announce the general availability date. Then we'll get to the GA date. Then we'll, of course, be able to sell it and then recognize revenue. And that is why I continue to say that I am just as excited as everyone else about this, and it should be more H2 weighted. And we've, I think, given you some sizing opportunities, and I think I would use all that, but I do think this is really about pacing, and of course, we've still got to get our security co-pilot and some of the Dynamics workloads priced and released, and we'll continue to work toward that. And of course, I think one of the things that people often, I think, overlook is, and Satya mentioned it briefly when you go back to the pull along Azure, I think in many ways, lots of these AI products pull along Azure because it's not just the AI solution services that you need to build an app. And so it's less about Microsoft 365 pulling it along or any one co-pilot. It's that when you're building these, it requires data and it requires the AI services. So you'll see them pull both core Azure and AI Azure along with them. And I think that's an important nuance as well.
Yeah, and if I could just add to what Amy said, right, the platform effect here is really all about the extensibility of the co-pilots. You see that today when people build applications in teams that are built on Power Apps, and those Power Apps happen to use something like SQL DB on Azure. That's like a classic line of business extension. So you'll see the same thing when I have a Copilot plugin. That plugin uses Azure AI, Azure Meters, Azure Data Sources, Azure Semantic Search. So you'll see, obviously, a pull through not only on the identity or security layer, but in the core PaaS services of Azure plus the Copilot extensibility in M365.
Terrific. Thank you.
Thanks, Carl. Operator, next question, please.
The next question comes from the line of Mark Murphy with JP Morgan. Please proceed.
Yes, thank you very much. Satya, there's so much evidence now that GitHub Copilot is boosting developer productivity by 40 to 50% or more, and it's resulting in higher quality code. Do you envision a similar level of productivity boost for the Microsoft 365 Copilots or the Security Copilot or the Sales Copilot? In other words, can every room in the house be remodeled to a similar extent such that that value proposition is pretty elevated across the entire stack?
Yeah, Judson Althoff would love you for having used his metaphor of remodeling every room of the house with AI. Because you're absolutely right. I mean, that's the opportunity we see. I think what you're also referencing is now there is good empirical evidence and data around the GitHub Copilot and the productivity stats around it. And we're actively working on that for M365 Copilot. Also for things like the role-based ones like Sales Copilot, Service Copilot, we see these business processes having very high productivity gains. And so, yes, over the course of the year, we will have all of that evidence. And I think at the end of the day, as Amy referenced, every CFO and CIO is also going to take a look at this. I do think for the first time, or rather, I do think people are going to look at how can they complement their OpEx spend with essentially these co-pilots in order to drive more efficiency and, quite frankly, even reduce the burden and drudgery of work on their OpEx and their people and so on. So therefore, I think you're going to see all of that translated into productivity stats, and we're looking forward to getting that data out.
Thank you very much.
Thanks, Mark. Operator, next question, please.
The next question comes from the line of Alex Zukin with Wolfe Research. Please proceed.
Hey guys, thanks for taking the question. I guess maybe just a multi-part. You mentioned a couple times that, you know, with the AI workload adoption that you're seeing on Azure, it's starting to look maybe a little bit different from an incremental share gain perspective versus previous generations. Can you maybe expand upon that? How should that drive core Azure consumption, particularly as we get through the year? And do you see a scenario where either, you know, the combination of lapping the optimization headwind plus the AI contribution plus this incremental tailwind that you're seeing around the workloads actually does drive a re-acceleration in Azure, particularly in the second half when you're going to start to see some of those things kick in?
Yeah, I mean, the thing that we are both seeing and excited about is both the new workloads. I mean, if you think about Azure, we have grown Azure over the years, you know, coming from, from behind. And here we are as a strong number two in the lead when it comes to these new workloads. So, for example, we are seeing new logos, customers who may have used another cloud for most of what they do are for the first time sort of starting to use Azure for some of their new AI workloads. We also have even customers who've used multiple clouds who used us for a class of sort of workloads also start new projects when it's in data and AI, which they were using other clouds for. So what I think you will see us is more share gains, more logo gains, reducing our CAC even. And so those are the things, the points of leverage. But at the same time, we are not a small business anymore in any of these things. These are, we're at significant scale. And so, yes, we celebrate. That's why we're even giving you the visibility of 1 point of it showing up this quarter, a couple of points showing up next quarter. And those are material numbers. So that's kind of what I think we'll track. And I think Amy mentioned it because we want, there are two parts to even this AI, right? There's the models themselves with our partnership with OpenAI. That's sort of one type of spend on compute. And the other is much more revenue driven, right? Which is we will track the inference cost to the revenue and demand. And you're already seeing both of those play out.
Thanks, Al.
Thank you.
Operator, we have time for one last question.
Our last question will come from the line of Kirk Materne with Evercore ISI. Please proceed.
Yeah, thanks for squeezing me in. Satya, I was wondering if you could expand a little bit on your comments on data platforms. I think we've heard a lot over the last quarter or so about if you don't have a data strategy, it's tough to have an AI strategy. Can you just talk about where customers are right now in that journey to have a more thoughtful data strategy? And what does that mean in terms of their ability to adopt AI services? Meaning, do they have to sort of tackle the data issue first before they can really take advantage of all the AI services? Or how should we think about that sort of juxtaposition? Thanks.
Yeah, sure. Thank you for the question. Yes, absolutely. I think having your data, in particular in the cloud, is sort of key to how you can take advantage of essentially these new AI reasoning engines to complement, I'll call it, your databases. Because these AI engines are not databases, but they can reason over your data and to help you then get more insights, more completions, more predictions, more summaries, and what have you. So those are the things when we say Copilot design pattern, that's sort of what that design pattern is all about. The thing that perhaps even in the last quarter, and I had that in my remarks, it's most exciting is how with Microsoft Fabric, especially for the analytics workloads, we brought together compute, storage, governance with a very disruptive business model. I mean, to give you a flavor for it, right? So you have your data in an Azure data lake. You can bring SQL compute to it. You can bring Spark to it. You can bring Azure AI or Azure OpenAI to it, right? So the fact is you have storage, separated from all these compute meters, and they're all interchangeable, right? So you don't have to buy each of these separately. That's the disruptive business model. So I feel that we are Microsoft is very well positioned with the way our data architecture lays out, our business model around data, and how people will plan to use data with AI services. So that's kind of what I mean by getting your data estate in order. And it's just not getting data estate in order, but you have to have it structured such that you can have the flexibility that allows you to exercise the data and compute in combinations that make sense for this new age.
Thanks, Kurt. That wraps up the Q&A portion of today's earnings call. Thank you for joining us today, and we look forward to speaking with all of you soon.
Thank you all.
Okay, guys, so that is the earnings call for today. Let me know what you think. Microsoft pulling back a little bit on this earnings call. Remember, tomorrow we got a lot of big earnings. We got Meta earnings. We got a bunch of earnings in the morning. We also have the FOMC meeting tomorrow. It's going to be a really busy day. We will stream the entire thing, so hit the sub button, hit the notification bell. We appreciate it. Also, guys, if you haven't checked out our sponsors, check out TopStep. If you want to day trade this type of action, the futures market allows you to day trade the S&P. You can day trade the NASDAQ. You can day trade currencies, gold, silver. The patterns are very similar to something like Microsoft. If you look at like the Q or the E-mini right now, which is basically the SPY, you can see very similar patterns. You got breakdowns in the SPY, just like you got breakdowns in Microsoft. And you can day trade in futures, no PDT restrictions. The most legit funded program in the world is called TopStep. It's a sponsor of mine. What they do is they give you a demo and they test your skill. There's no PDT in futures. You can day trade short, buy market, buy bid, sell the ask, just like stocks, but there's no PDT rule, and TopStep is a funded program. The most legit one in the world. They pay out millions, fund thousands a year. What they do is they give you a demo and they test your skill. The base one's $49. If you could hit $3K in profit on that without losing over $2K, so it's a 2 to 3 ratio, they fund you $50,000 with a 90% split, and you get to keep your first $10,000 in profit. And again, they pay out millions in actual withdrawals every year. They fund thousands of traders a year. If you want to day trade, TopStep is the way you should do it. Check out the link here. But again, I am biased in their favor, of course, because they pay me money. Also, guys, check out Moomoo. Moomoo is really, really nice. It's got one of the best promos right now. If you check out Moomoo, they're a sponsor of mine as well. If you open up an account with them and deposit at least $100, they give you 5 free stocks. And again, honestly, opening up a platform should be an obvious choice. If you look at this, some of their analytics are some of the best in the game, in my opinion. You can see the best performing sectors. I could look at copper, steel, aluminum, other industries. I could look at a stock heat map to see Google was up, Nvidia's up, all this different stuff. And this is all free on their platform. Hot stocks. I can go to pre-market. I can go to after hours. I can go to futures and dividend payments, announcements, strategies. I can build different strategies. I can look at bearish flags, bearish symmetrical triangles, wedges, horn tops, arc tops. I can go to market hotspots and see what I just showed you. I can go to their paperfolio section. And again, there's zero commission in their platform. There's no commission in stocks. I can go to their paperfolio and follow different traders, looking at their portfolio, see how well they're doing. This guy's up 34% basically on the month, and I can see what he's buying, what he's holding in that portfolio, and then I can follow him and copy him if I want to. Their news source is super up to date, super useful. I can look at their economic calendar, which is kind of what I use to see what's going on in the market. I could build watch lists. There's so much stuff, and they're open the entire time of pre-market from the start of pre-market to the end of the day. Check them out. You get up to 15 free stocks plus a free share of Google or Tesla if you deposit. And so check out the link. Great way to help support the channel. You can see it pinned at the top of the chat. You can also see it right here, guys. And we will be back tomorrow morning. Be here, be early. Good luck. Appreciate the love, guys. Y'all stay safe. Again, Powell speaks tomorrow morning. We got a bunch of earnings in the morning. And then we have the FOMC meeting midday. And then we have Meta earnings after that. So it's a busy day. We're going to stream all day. Again, hit the subscribe button, hit the notification bell, and you'll catch back up. And we'll see you guys later. Good luck. Y'all be safe.